Traders, the odds are against you. Traders, listen to me carefully. The odds are against you. One more time, listen to me carefully. You will never be able to fault me for failing to tell you this, for failing to put it in your face, for failing to shout it as loud as I possibly can. The odds are against you. Why? Because there's a 92% failure rate in the short-term oriented trading space. That's right. 92% of every one of you listening here will fail. 92% won't make it, no matter what you do, no matter how hard you work at it, no matter what your intentions are. 92% failure rate, and not me, not any firm in the United States, not any firm internationally, not any expert, not any mentor, not any trader, not any trainer, not any mentor can change this statistical fact. It is etched in stone. 92% failure rate. Now breathe that in, traders. I need you to understand this. I need you to understand what you're up against, because you ultimately, at the end of the day, are going to have to answer this question. This one very, very important question, traders. You're going to have to answer this. Do you understand? You're going to have to answer this. Do I have what it takes to be the 8%? Guys, this is a simple game, but it's not easy. There is a huge difference between simplicity and easy. It's simple. Markets go up, markets go down. Sometimes they go sideways. 3 possibilities: up, down, sideways, up, down, sideways. That's a simple rudimentary mechanism. But I am the last person on planet Earth that will tell you that this activity called day trading in particular is easy. It's not easy. In fact, it's one of the most challenging activities you as a human being will ever pick up. Do you know why? Because in order for there to even be a hope for mastering the market, you have to first master yourself. And let's face it, how many people actually master themselves in this world? How many people actually reach a point where they do what they say they're going to do? How many people really keep their promises to their kids, their wives, their husbands, their community at large, their societies, their personal God? Very few people reach the point in their life in anything where they have accumulated or accomplished self-mastery. But the only way to have any chance at success at this is to first master yourself. You can't take an unmastered you into the market and think that there's going to be success in the market. You can't take an undisciplined you and go find success. You can't take an untrained you and go into the market with your untrained self and think that you and your untrained state is going to pull money out of the markets. Won't happen. You can't be an ill-informed individual and take your ill-informed self into the market and pull money out of the markets. You can't take your unmastered self. You can't take your undisciplined self. You can't take your untrained self. You can't take your uneducated self. You can't take your uninformed self. You can't take who you are right now without changing yourself first. You can't take who you are right now and take who you are right now in the market and expect the market to give you money. So what must happen? You must first change. You must first go through a metamorphosis. You must first become educated. You must first become discipline. Discipline is not something you're born with. It's something you work on, like your muscles. You got to hit this thing up every couple of days, every day of the week, if you will, to build that muscle, to build that, to build that capability. You have to work on becoming disciplined. You have to work on becoming educated. You have to work on becoming experienced. This work happens first. And it is this work that transforms who you are. Then you take the transformed you into the market, and it is that transformed you that starts producing progress. But if you think that you can stay who you are without putting work into creating the change you need in yourself, if you think there's just, I take this 2-day course and I go into the market, 2 days, it's not enough to change who you are. Take this 2-day course, go into the market, open up an account, and I should become rich in the next few weeks, then you should really find another freaking planet to work on because you are living somewhere in outer space, not here on planet Earth. I don't know about any other planets, but that doesn't work here, not on planet Earth. I have yet to do intergalactic travel. I'm waiting for Elon Musk or somebody to make that possible. But until then, I only know what the situation here is on planet Earth. This industry has a 92% failure rate, largely because people don't want to go through what it takes to become someone different first. They want to stay who they are and take who they are into the market and take money out of the market. It will never happen. My mother used to say, Oliver, never say never. Oh, never say never, Oliver. Well, I'm telling you, Mom, sorry, never. Let me say it again. Never. All right, guys. I know I'm silly, but it's a point worth. I'm telling you, it's a point worth belaboring. All right? 92% failure rate. Get it locked into your head. Most people know nothing about financial markets. They think they do. Oh, well, the market goes up and the market goes down, right, Oliver? That's it? Yeah, that's pretty. Most people know nothing about financial markets. That's a con. And here's another big one, guys. Success comes after experience, and experience takes time, years. You can't be an experienced trader in 2 days. You can't be an experienced trader in 2 weeks. You can't be an experienced trader in 2 months. Becoming experienced takes time. You can't cheat experience. All right. Anything good that happens before you are experienced is called luck, traders. Only what happens after experience can you claim as yours. Listen to me carefully. You can't become successful before you become experienced. Get this in your head, people. You cannot experience true, real success before you become experienced. True, real success comes after you become experienced. And what's required to become experienced? Time. This is what people do not want to put into this. They want a microwave. They want a microwave results. Can I have my gourmet meal in 15 seconds? No, you cannot. This is the number one reason why there are so many scams in this industry, because these scammers, right, which even I, believe it or not, have been accused of. Are you kidding me? Putting this truth in your face? How? But this is the number one reason that scammers in this industry get away with their scams, because they sell you on the idea that anyone can do this. They do not tell you that 92% of the people are going to fail. They do not tell you that this is difficult. They do not tell you that you're going to fail first until you become experienced. They do not tell you that experience takes time. They do not tell you that success happens after experience. And before your experience, you're going to be a loser. The reason why, how many people are in this room? Check for, there's 427 people in this room instead of 40,000 people in this room. Do you know why? Do you know why there's only 400 people here instead of 40,000 people? Because I tell you this truth, 92% of you are not going to make it. There's only 400 people here because I tell you that success comes after experience. There's only 400 people here because I tell you that experience takes time. There's only 400 people here because I tell you what's real in this industry. If I wanted 40,000 people in this room, I would constantly preach from every podium I can that everyone can do this, that you're all going to be successful, that it doesn't take time. Just follow these 3 things and get rich. I would have 40,000 people in this room. But I will never do that. You learn how to win in this business by first learning how to lose. Can I repeat that for you? You learn how to win by first learning how to lose. What does that mean, traders? You're going to lose first. What does that mean? You are going to become an expert loser before you see a single dollar, before you get winning trades consistently, before you call yourself a success, before you start to support yourself with this activity. You are going to be one of the greatest losing traders you have ever seen. You're going to become an expert at losing. You're going to become so intimate with losing, you're going to feel like this is just your natural state. You lose your way to success in this business. There is no way to win first, because winning doesn't come before your experience. Experience comes after you have lost tens of thousands of times. Guys, listen to me carefully. I get very, very emotional about this, and I apologize. It's just the way it is. It's just me. I get emotional about this because I need all of you to understand this. There is a direct link between how much you lose first and how successful you are later. And isn't it ironic that what all of you are trying to do is you're trying not to lose the very thing that you need to do. The very thing that you need to do now is to lose as much as you possibly can to get the losses out of the way now. You don't want the losses in the future. Just get the losses out of the way. Become so intimate with losing. Become so intimate with every possible error, every possible mistake. Know it like the back of your hand, so that at some point, the market can no longer fool you. The market can no longer trick you. The market can no longer surprise you. You've been there. You've done that. You know every possible mistake that can be made. You know every possible error, every booby trap, every dead end. The market loses its ability to punch you without you seeing the punch coming. How do you get to that state? You become an expert loser. Why is this a con? It's a con because most people don't have enough money to get through the losing period that happens first. First of all, they enter the game with this Mickey Mouse Disney idea that I'm supposed to win from day one. This is not Disney World. I'm sorry. This is not a Disney movie. This is real life. It is impossible for you to win until you become experienced. And it is impossible to become experienced until after you have become the #1 expert at what? Losing. How does a baby learn to walk? By running first? Wait, I'm going to learn to walk by sprinting first in the Olympics. Then I'll learn to walk later. No, a baby learns to walk by first trying to stand and falling. Standing, falling. Trying to stand, fall, 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 fall less. Fall less. Stable, don't fall often. Take a step, fall. Take a step, fall. Take a step, fall. Take 2 steps, fall. Take 2 steps, fall. Take 3 steps, falling, 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 until the baby becomes so intimate with falling and all the reasons for falling that he naturally starts to avoid the reasons, but not before becoming intimate with every possible way to fall. Doctors tell us that parents who overly protect their children from falling wind up with clumsy kids, zero athletic ability, because they weren't allowed to fall enough. You lose your way to success at this business. Why is this a con? It's a con for 2 reasons. Number 1, most people start off with a tiny bit of capital, and then they lose it because the first period has to be lost. The first period of a baby learning to walk has to be falling. You're always bad at something in the beginning. Always. First time you pick up a basketball, you're horrible. First time you put a golf club in your hands, you're really horrible. My golfers out there know that. The first time you try to kick a soccer ball and control it, you're horrible. The first time you try to walk, you're horrible. The first time you try to talk, you're terrible at it. You are bad at everything you start off, but somehow when it comes to this activity called day trading, that all of your common sense leaves your God-given head for some reason. And for some reason, this is the only activity that life is supposed to be different. No, I'm supposed to be good at this from day one, right? Really? You don't apply that common sense measure to anything else in life. But when it comes to this, you expect to be good right away. You expect not to fall. You expect not to lose. You expect to make the ball in the basket every single time. The first time you pick up a basketball, really? How can that be? Why is this supposed to be the exception to you? You're going to be bad at this. You're going to lose your money first. Absolutely. You're going to fall first. It's just the way life is. Again, I don't know about life on other planets. We're still waiting. But life here, you lose first in everything. In everything. Do you understand what I'm saying? Are you picking up what I'm laying down? Am I talking too much? I am frustrated at the level of naivete, and I am frustrated at, I'm frustrated at the lack of common sense when it comes to my industry. I'm not here to sell you on some.
Well, good morning, traders. Good morning. I really like to play that a few times. Hopefully you guys have heard that. Hopefully you guys have heard that, lately. Hopefully you listen to it. It is very important. Britt, go ahead, Britt.
Hi, good morning. Yeah, I needed to hear that. I've never seen this before. I joined LLA like 2 years ago, almost around this time, and I haven't had the success that I hoped I would have had in the 2 years that I've been trading. So to know that that's okay, and I need to lose, like you have to do that, like that's a part of the process, and not being able to pick up on something as quickly as you might be able to with other things, like that this is okay, basically. I needed to hear this, so thank you for sharing it.
Yes, indeed. So I don't know what everybody thinks about trading. I came across trading probably, in the same manner that most of you did, through somebody that was in the IML, talking crazy, sign this person up, but if you think about it logically, I think Oliver hit it on the head when he said you have to lose first in order to win. That's with anything, any sport that you play. And more importantly, if you guys played sports in high school, I'm probably the oldest person on the call, but even when I came up, you had to work in your own time, whether it was extra running, extra gym time, extra any and everything, unfortunately my mom didn't have the money to send me to camps and all that good stuff. But if you're an athlete nowadays and you don't have a personal trainer, I mean, you probably won't make the varsity team. Or if you don't have a extra gym session, or if you're not getting up early, putting up shots, whatever it is that you do. It's the same with trading, guys. Like you can't expect to duplicate somebody else's success that you see in the group. They're posting profits. Man, this person is winning $3,000-$5,000 a day. In my boy Fred's case, $9,000 or $10,000, $13,000 a trade. and you're like, man, I want to do the same thing. But you don't ever go watch a YouTube video. You don't ever sit down and listen to a trader series. You don't ever associate yourself with traders until it comes to this Saturday. I'm gonna level with you. I don't give a darn how much time we spend together on Saturday. Your trading journey may take you 10, 15 years. You have to put in time to study. The same way you would put in time to study for college. You don't go to college and sit down in your class and that's all the work you have to do. If you want to graduate college, you're going to come home and write some papers. And in order for you to write the papers, you have to go do research. You have to cite your sources and all that bullcrap. It might be a little bit different these days about citing sources. I know all that stuff is electronic, but the point is this: if you don't have the proper mindset when it comes to studying, then this journey is going to take extra long. Kind of like if we don't have the maps, the Google Maps or Apple Maps on our phone, and we take a trip, that trip is going to be extra long because the destination is not plugged in. Trading, once you figure out what you need to know, and all of us who took Ruby's course, if it doesn't matter how you feel about Ruby, personally, what you have to give Ruby credit for as a 22-year-old kid is she put together an outline of everything that you needed to know to become successful at trading, right down to the money management, right? If you never took her syllabus and researched those subjects on your own, then shame on you, right? Maybe you thought that you could listen to what Ruby said on a video and become this great trader, but it doesn't work that way. 9 times out of 10, there are going to be some bits and pieces of information that are left out. The same way it will be if you just listen to this call on Saturday, right? I can't tell you everything that I went through. I can't tell you every detail that helped me out. I can't give you every reference that I've researched on YouTube. What I can tell you is that I spent $57,000, right? That means nothing to you. You didn't feel that pain. You didn't feel the losses pile up. I personally didn't keep track of every dollar, that was spent. I knew we were getting slaughtered, me and my brother. And at least he had sense enough to quit. I didn't have sense enough to quit. It was something, I fell in love with trading. Now, I don't want to discourage people by saying, that I spent this massive amount of money. But the larger point is this. I had that money to blow because I was making, crazy money for a single person at that time. And, those child support days were well behind me at that time. So it's not like the money wasn't there for me to do whatever I wanted to do with it. My brother already told y'all I was I'm cheap or whatever, but the difference is this: we all spend money on things that we value, right? And some things that you guys spend money on, I would never spend money on. I would never buy a $2,000 purse. I would never buy, or I would never spend, $150, $300 on hair, But I mean, I don't have it now anyway, but you understand the point. Some people will spend their money on different things, and other people would never spend that type of money, on $1,000 dinner. So you have to decide, what the best option is for you. Now, with trading, you don't have to spend any money until you learn how to trade, right? Because they have what we call demo accounts. So you can get that demo account and you can become a great trader. Now, I will say that the emotional part of losing money in a demo account isn't the same as losing real money. But if you're a disciplined person, which most of you aren't, but if you're a disciplined person, you can get in a demo and learn how to trade and become very successful, right? Because you're trading like a robot, you know. But the problem with disciplined people is, or the problem with undisciplined people is they assume they make these massive assumptions, right? That won't happen to me, or you know, I'm better than that person, or I'm better. You know, I can learn this in half the time, or whatever. But there, you know, there's a process that you're going to have to go through as a trader, and at some point you won't be able to lie to yourself anymore, because it will smack you in your face all the things that are wrong, and you will know what's wrong. You can lie to me, or you can lie to anybody else, but you will know, and you will understand what the problem is. Okay, so I can teach you how to read a chart. I can teach you how to discern the news. I can teach you all that stuff. But if you don't do the inner work, if you can't control your emotions, if you can't break out your day and spend 15, 30 minutes on a chart, then the chances of you finding success are slim to none, right? But if you can do those things and you stick with it, you will become a successful trader. I mean, this is not rocket science. It's very simple, but you have to be locked in and be disciplined. I have a chat group with the swing traders. We text, and you know, when I see things, I drop them in that chat. And you know, most of the time, you know, they don't pay attention to what I drop in the chat anyway. But you know, a lot of times I'll text them, you know, and like, hey man, did y'all take that trade? And they'll all be silent, like, man, I ain't taking that trade. And it's frustrating to me, but I understand. You know, I've been there, right? You're getting bombarded with information. You want to see and understand the trade setups for yourself, and not because somebody is sending you a signal or what they think. So at some point, it will all come together, and you'll be quicker around the curve. You know, there are a few concepts that I subscribe to that are very lucrative for me as a trader, right? When I see it, I trade it, and it doesn't even matter, right? It's because I have the experience, right? I went through and I missed those trades in the past, you know, and I've also back tested the theory in the past, you know. And if I look at this chart, you know, it's a daily chart. Whenever I see this wick and they wick these lows on the daily chart, I'm buying, right? And even if I just bought and held, that's 185 pips. We wick these lows. $190 pips, right? This wick right here, $255 pips. If you just pay attention to the simple things on a chart, you know, if you just pay attention to what the market is doing when it gets down here, you could have gotten paid 1, 2, 3, 4 times, right? 4 times you'd have gotten trade on the same exact move, right? The same exact move. The market comes down, it goes sideways, you get the wick, it goes up. The market comes down, it goes sideways, you get the wick, it goes up. The market comes down, it didn't go sideways, but it tapped into this purple spot is a zone. You get the wick, the market goes up. Comes down, goes sideways, wick goes up. Too easy, repetitive, easy money. Now, I understand this is in a vacuum for most of you guys. But if you only knew one thing about the market, if you only knew one strategy, that this is the strategy that I think would pay you pretty routinely, right? Now, here's the deal. You have one trade on May 2nd. Your next trade won't be until 2 weeks later, May 16th. Your next trade won't be until July. So all of June, you didn't get action. And then July 13th. So those of you who get into trading for the adrenaline rush, or those of you who get into trading thinking that this is going to be the most exciting thing that you do, you have to understand that trading is just not what you think it is, right? Trading, in fact, if you're a successful trader, it's boring, right? You're not taking trades 5-10 times a day. Your setup may come today, it may come next week. I sent a message, in that group chat, and yeah, we can get you added to the group chat, Britt. But I sent the trade to I sent a text to the group chat that said the more boring your trading is, the more profitable it is. And that's the absolute truth. You don't have to be in a trade every day. And a lot of times when you enter a trade, it's going to last several days if you're a patient person. But it's not what you think it is. It's not 50 trades a day. Now, you can trade like that. You can scalp. Or you might just take, one trade every so often, and that trade pays you, And if you're catching, 150 pips in a month, you can replace a job. All you're doing is exercising proper risk management. Most of the time you're trading on a funded account, and those 150 pips are more than what you're making at a great job in the United States. So I just want you to be encouraged and understand that trading does not have to be this frantic activity that in a super adrenaline rush. It doesn't have to be, hey, I'm watching the charts 24/7. A lot of times, the people that are the nearest and dearest to me in this trading world are always telling me how busy they are, and I get it. I've been there and I've done that. But what I'm hoping that you guys understand is it doesn't matter how busy you are. If you do your homework on the weekend, you don't even need, you don't need to look at the charts until your alert goes off. If you do your homework on the weekend and you have these areas marked up, man, one right click right here, I can set an alert when price passes. I'm Gucci, like I'm here. I have my trade tool set up for an entry for the sell. This is the zone I think is going to buy in. Once the trade hits this area, it's going to send me an alert. My phone will buzz. My computer will make all kinds of noise, whatever the case may be. Now I'm in the trade going up, and I can enjoy my life. You don't have to be glued to your computer, to your desktop, laptop, phone, any of that. All you have to do is understand your setup before the week starts and then trade it. Hey, and if your setup does not come to fruition, then it'll just be a regular week for you, and you'll just do whatever you normally do during the week. So you guys know that I'm sitting on a move on the US 30. We all like to trade the US 30 because, whenever this move happens, this would be enough money. This would be somebody's annual salary, right? So everybody's sitting on a move, but most of us are not patient enough to wait on this move, right? We know the interest rates just got raised. We know we're in a recession in the US. The US is the largest economy in the world. If we're in a recession, everybody's hurt. Everybody's in trouble. So, you know, it's kind of like we all the warning signs and the sirens and whatnot are going off. But the market went up. It didn't sell. We expected this to sell, right? But I want y'all to pay attention to right across. Can you guys see my screen? Yes, no?
Yes.
Okay. So right across, if you look across this chart, right? This is the initial sell-off from this point. Back in June, the market was at the same level and it sold, right? I mean, it collapsed, it crashed, whatever the case may be. The market was here, so it fell 3,000. Let's just call it 3,200 points. 3,200 points is a great deal for the US 30. And that's why most of us are here to trade these indices and get rich off this trade, right? We expect that the market is going to sell off again. These same 3,200 pips, probably more, right? I can sit here and talk about us having a break of structure here, right? Break of structure, price needs to go back to the order block that sponsors the break. If you look for the order block that sponsors the break, it's right here. I can talk about all that, right? You can see it. You can see that this price is pushing right back up to the zone. But are you patient enough to wait for the setup? Leandro says you can get rich from trading the pairs. Yes, you can, but my point is this. We all see the move and we all anticipate this move. But we all have to wait. None of us can control when this move is going to happen. None of us have ownership of when this move, you know, it's kind of like when Jesus comes back, you know, it'd be like a thief in the night. All the signs are there, but none of us know the hour. So this is the same situation, guys. All I can do is preach patience. It's not like you're going to miss it. Like you're going to know when it happens. If you look right here, it took 1, 2, 3, 4, 5, 6 whole days. 6 whole days for the market to sell off. You know, in great fashion. So please do not feel like you're going to miss the move. And even if you missed this day, the initial day, you have a few more days. If you catch half of a day of selling, you can make 25, 30 bands. It's not the pig that gets paid in this game. You know, it's the patient trader, right? We have our setup, right? Go on and live your life, set you an alert. Once it hits your alert, you can start selling it. But you don't have to sit here and watch the charts and be all anxious and nervous, you know, about a sell. Maybe my brother needs to be a little bit like that because he doesn't have internet at work. But most of us have access to internet, you know, 24 hours a day. So you're not going to miss this move. And I say that to say this. There are other moves that are happening in the market while this is not happening. So other moves will pay you. If you just waited on this move last week and it didn't come, you didn't get paid, you know, which is, I guess, is not the worst thing, right? You didn't lose money. But while you were waiting on this move, I got paid from other moves because other moves actually happen. I'm gonna pull up EA because this is a trade that I called out in the group based on the same thing I just showed you. Market came down, went sideways. We got that daily wick. And I told the group, hey man, you know, this trade is setting up, guys. And they all ignore me. And I got in right here. So the majority of the move up, well, all the move up I caught, you know, it started retracing and I got out of the trade in profit. But my point is, this move right here, this one move up right here paid me more than 10%. So if your goal, you know, is to make a certain percentage, your whatever you're trading, you know, using your risk management or whatever, you put your percentages together by coupling wins together. And if you understand the concepts that you're trading, market came down, went sideways, it wicked the lows. I'm in it every time. Every time. I'm not thinking about it. I'm not waiting for an order block. I'm not doing any of that. Market comes down, goes sideways, wicks the lows. I'm in there every time because I already know, I know from experience that market is pushing up. If we were on the opposite side and the market came down and went sideways and wicked the highs, guess what? I'm in that piece. I know that the market is going to collapse. It did it a few times here. If you look at you have these relative equal highs, you get this wick comes up, wicks the highs. You know that the market is going to cook with Crisco to the downside. This is not my concept, guys. This is ICT's concept. You know, whoever you're studying, whoever you're following, whoever you're imitating, you know, as a trader, you must know and understand the concepts. If you know and you understand your concepts, trade them. The market is not gonna be, it's not gonna trick, it's not gonna hold on to the setup. It's not gonna do something different just because you enter the trade, right? It's gonna do the same thing that it's always done. These markets move on algorithms. There are patterns, you know, when the computer does something, there's patterns. And the patterns are playing out in your face. We're showing you how to identify the pattern. Just trade the thing. Trade it. You have to be robotic when it comes to trading. You know, win, lose, or draw. You're going to lose some trades. There's no way around that. But if you're not over leveraging, if you're not risking more than you're supposed to, so what? If you're risking 1% of your account, then you can lose 10 trades and not blow your account. You can lose 10 in a row and not blow your account, as long as it's not on the same day. But I guarantee you, if you're taking the trades as a disciplined trader, you're never going to lose 10 trades in a row, right? The problem is most of us don't take trades as disciplined traders. I've definitely lost way more than 10 trades in a row. But most of those trades were revenge trades, or, hey, the market is moving, let me just get in and collect some pips. You know, maybe you stay in there too long and it rolls back on you. But there are opportunities every single day, all right? And what I would like to do is go over a few of the opportunities we see. Now, probably for about 5 or 6 Saturdays, we've called these trades out. We've identified the opportunities, and most of them have came to pass. I'm not going to ask you, you know, if you've been getting paid off of the opportunities. That's not my business. But what I would say is, if you take these trades, for the most part, they're probably going to pan out, right? For whatever reason, well, I'm not even going to say for whatever reason, but the euro has gained a little life. So the euro is going to the upside. You know, it's based off of a few things. They definitely increased their interest rate, but you know, I think there's some cautious optimism over there in the Euro land that that we can take advantage of an up move for the euro. And the interesting thing is, if you look at the chart for the euro, it needs to retrace anyway. So if you're taking these euro pairs, this is the euro Australian dollar, but if you had euro CAD, it did the same thing. Can you guys hear me? Okay. I'm getting a message from my computer that the audio is.
Yeah, we can hear you.
Okay. So if you take the euro to the upside, you have a double bottom here. If you take these opportunities to the upside, you're going to get paid. All you have to do is find an entry. You have an order block here for a bullish move on the daily. So you just wait for a small pullback, trade it to the upside. No, it's not going way up here in a day, maybe not even a week. You know, it's going to take a little time to push up, but you have nothing but time. So if you can stomach holding your trades, you have ample opportunity for upside moves on the euro. We got a lot of news, last week on the dollar, right? The dollar got weaker. I don't know if you guys noticed, but the dollar got weaker last week. And, we kind of touched on this last week because we anticipated the rate hikes, which we got a 75 basis point rate hike, which is it's a fairly large rate hike. So we would expect the dollar to get stronger. But last week we touched on all the pairs need to retrace, right? The dollar has been going straight up. If you look at the Dixie, it's been going straight up. The dollar needed to pull back. This was the zone that we talked about. I haven't even touched this chart, right? But as you can see, the dollar came right back to the zone. So what I can assume is even if the dollar meandered around this level, we can expect for the turn to start pushing up, right? Once the dollar starts pushing up, those indices will probably start breaking down, right? We have a lot of news coming out. Does everybody know that this is NFP week? This is a very important week. Does everybody understand what NFP is? If you do not understand what NFP is, drop a 2 in the chat, please. Why is NFP so important this month? Why is it more important this month than it has been in months?
Y'all think a recession is here, so if unemployment is higher than expected, then everybody will panic and sell.
So, you don't think a recession is here?
Well, I think technically that there's one. I think I recognize that we had the two quarters of I don't know if it's negative GDP or reduced GDP, but I understand that we met that definition. But when I go out to eat, parking lots is packed. When I do anything, gas is $5 a gallon or whatever it is. I mean, just nobody appears to be hurting. I got a swimming pool that's empty here, and I can't get nobody to come fix it. So what I'm telling you is I understand that we meet the definition, but when I look at the construction going on, when I look at the fact that I can't get nobody to come, maintain my yard, fix my pool, I go out to eat, the parking lots is packed, there's nowhere to park. I guess it just hasn't trickled into the economy yet. Everybody's still got work. They got too much work.
Well, I agree, but I think that when's the last time an American has been a responsible spender? But I agree with what you're saying. If they don't have jobs, then they don't have the money to spend. But I do believe that that we're gonna see some of those results. Even just listening to some of those those companies that reported, and they was talking about laying off people. So I do believe that we're gonna start seeing that trickle down. And I saw a report earlier this week. I don't even remember what report it was. I think me and you talked about it, Sean. But it was a report, a jobs report that was worse than expected. So I think we might start seeing higher jobless claims than we expected. And once that happens, I mean that's not going to be until Friday that we get that information. But if those jobs, if the job claim comes back and the report is worse than expected, I can definitely see that as a catalyst for a cook-off, right? So we might have to wait until Friday to see the Dow Jones and the NASDAQ cook-off, which makes sense if you look at the chart. There's plenty of upside still. But I don't really want to speculate on when we're going to get this, when we're going to get the sell-off, right? I just want us to understand that it's going to happen. But we have to be patient enough to wait for the move to come to fruition. We can't make it happen. And in the meantime, we can trade things that actually are moving. Did anybody trade the JPYs besides Mark? How you doing this morning, Mark? JPYs. Can you traded NJ?
Yeah, I bought it up. I think it had a bearish order block at the beginning of the week. I bought it up and then sold it down for most of the week.
Yeah, can I brag on you, Kenya?
Sure.
Okay. Hey, Kenya's in the text group, and I know I poke fun or I pick on Kenya every now and then because of her aggressive trading style. But Kenya had several successful trades throughout the week. And the thing that I like about it is this: it wasn't necessarily trades that I picked out or whatnot. I think that's very important for your progress, for everybody's progress, as a trader. When you can pick out your own setups and you trade your own setups, it's not only empowering, but it reinforces what you've learned or what you're learning, and what you think you see, right? I can talk about moves that are going to happen, but when you can go and you can take the information and you can apply it to what you see on a chart, that's when the real growth starts to happen, as a trader. There are several videos, both that I've done, but several that other people have done. And they may explain some of these concepts better than I explain them, or even if they aren't better, they'll explain it in a different way, and maybe you'll pick up on the way they explain it better than you pick up on the way that I try to explain it. So whatever you do, if we talk about a concept, go do the research. I can't really stress that enough. Go look at a YouTube video. It doesn't have to be a 3-hour video. It could be an 8-minute video, 5-minute. I mean, there are several videos that cover the same topics that we talk about week in and week out that you can watch, and maybe you'll get a better explanation or a more clear understanding because you heard it from somebody else who explained it in a different manner. So whatever you're doing, Kenya, please continue. I think a lot of what the issues were just hyper-aggression and not being as disciplined, probably as you should have been, as you should be. And even today I struggle with discipline too. Whether it's being a little bit more aggressive on my lot sizes, But I do feel like there are times where you can be more aggressive. I just never talk about it in this setting. Um, I think most professional traders are more aggressive on lot sizes during certain setups, right? Like when we get this sell move on the Dow Jones, I think there are times during that sell move where you can be hyper aggressive because the market is moving in one direction. But I just want everybody to understand that this does not happen overnight. Okay, this is a process, and even when you conquer it the first time, it's going to be a battle to do it again, right? And then the third time and the fourth time. I always talk about meeting your greed demons. You think once you beat up your greed demon, but it's really not. Your greed demon goes and sits at the table and recoups. And the next time you jump on your back with some, just understand that this is a everyday thing. But back to this NFP, non-farm payroll, non-farmers payroll. It's basically a report that does exactly what it says. It reports on if you're not a farmer and you're on somebody's payroll, you're counted in that report, right? So if this report is on par with what they estimate it is, then that's cool. But if there are less people on that report, that's going to be a sign that companies are laying people off, right? And if you couple that, it's dropping tea leaves, right? The last report we got was that we're in a recession. So now if this report comes out on the heels of that we're in a recession, if this report comes out that we're laying people off, then the fear is going to go way up. And once fear happens, people start taking their money out of the market. The Dow Jones is going to crash. The NASDAQ is going to crash, right? Once there's fear introduced in the market, what happens to the JPY pairs? They fall off a cliff. Well, if you look at last week, if you look at the JPY pairs, USD JPY fell. GJ fell. I got paid nicely from GJ. I think all of them fell, maybe with the exception of EJ. But even EJ fell. EJ is starting to head back up. This is Monk's pair, AJ, it dropped. NJ, it dropped. So if you're paying attention to the news and you know where to look, and all of us who are on this call should know where to look because we talk about this all the time, right? We talk about the importance of the JPY all the time. We talk about why it moves the way it moves all the time. We talk about it being a safe currency. So if we're paying attention to these pairs and we're paying attention to the way they move, then we can kind of make some assumptions about what's going on in the market. There's uncertainty, there's fear. And I can assure you, if this job report is bad, then these pairs are going to cook off to the downside. And all you have to do is sell it. You don't have to guess. You kind of have to understand where to look and where to go for trades. And as my boy Cleveland would say, do you guys listen to Cleveland? Or you only listen to Cleveland when I pull him up? As Cleveland would say is, you got to trade the fundamentals. If you aren't trading the fundamentals, you're full of crap. That's what Cleveland says. Do you guys listen to Cleveland? No, y'all don't listen to Cleveland, man. I don't know what y'all do sometimes. Kim, do you listen to Cleveland?
That would be a negative, sir.
You are hilarious, man. Y'all need to go listen to Cleveland because Cleveland will give it to you straight. This is a probably a 5-minute video that I'm telling you about your fundamental analysis versus your technical analysis. If you're not using fundamentals, which we do because we talk about them on this call, but I don't know if you guys personally understand or listen to or go find your fundamentals. You have to be able to take what they say in the news and apply it to your charts. So you have to understand that this recession talk is going to influence the movement of those JPY pairs. You have to understand that higher interest rates is going to negatively influence the equities market, you know, the Dow Jones, the NASDAQ, the S&P. So that whenever you see the news events happen, you automatically know where your next trades should be, right? That's why we're looking at the Dow Jones for a sell or the NASDAQ for a sell, because these things that are happening fundamental, the fundamentals that are playing out in our environment now. You guys have any questions? Hey, Elfie. Is Elfie on this call? I thought I saw her earlier. Well, I see her, but I don't hear her.
I am. I'm in the car.
Oh, hey, Elfie.
Can you hear me? Yeah.
I can hear you. But I wanted to ask you about is there any interest rate news over there? I know you guys hiked the interest rate, but the euro is on the rise. Do you listen or do you follow Euro news? I know you live in Berlin. Like, do you actually follow the news?
I do not.
Come on, man. You just like freaking Leandra, man.
Sorry, excuse me.
Leandra is more on point than I am, and that's one of the reasons why I'm not in the group.
What group's
Shit.
this?
No,
group is
Whatever.
this?
I'm talking about following the news. Leandra. You don't follow the news. Elfie doesn't. You know, like we have connects in these foreign places that don't even listen to their own news.
Sorry, I'm sorry, and catch me up because I just had to go make some food. I was hungry.
Oh, no, I asked Elfie if she followed the news.
mhm.
You know, in Berlin. You know, like
Yeah.
what's going
In
on.
Germany, yes.
You know, because they raised the interest rates. The euro is on the rise.
Mhm.
I was hoping we can get some inside information. You know, kind of like I asked you the other day about the UK and you didn't know anything. Oh, I thought that's news.
No, the UK, they are raising interest rates on the 4th. I think it's next week, Thursday. I've always got that in my diary actually, so I do know a bit. It's just that what's the point of following the UK when the USA moves the market?
Listen, because some of us trade GBP pairs. Are you serious?
Well,
That's actually going to be my question. That same thing. I mean, if you are a indices trader, whether it be the UK 100, that DAX, or any of our indexes, you don't really need to follow, you know,
the USA news. But saying that, I've tried to trade the UK 100 and I don't like the way it moves. And the German 30, I tried to trade that in the morning. I don't like the way that moves either. So I just narrowed in on US 30.
I got it. I understand, y'all, but what I'm trying to pull out of you.
Okay, what are you trying to pull?
That there are other people who don't trade indices only.
Mhm.
So, you know, be a little bit more, be a little bit more selfless, and tell the people who trade the GBP, because you know you can get paid a lot of money trading GBP, like GBP AUD, GBP CAD, GBP Chef. If you understand when they're raising interest rates or all that good stuff, so it'd be nice if you had that information.
Well, the UK just follows the US.
That's
Everybody.
They
But now
follow
that
the
you
leader.
exposed me, I need to say goodbye.
What'd you say, Elfie?
Effie, where you going?
I have to replay. I'm sorry. I wasn't, expecting to be called out and exposed like that.
Neither was
Whoa.
I just literally come with my soup and I'm just I hear my name being called. I'm just thinking, what is going on?
Well, all I'm
But
saying,
I see your point, Todd. I really do.
Yeah,
And
you
you
do.
have a point, and I shall do better in the future. Okay. But I'm out now. Thank you
You
so
don't leave
much.
because he's attacking you.
No, I have to
Fight
go
your
because I
corner,
have an
girl. Fight
appointment.
your-
That's
okay.
why.
I'll fight your corner. I'll fight our corner, girl.
Thank you.
Yeah, he won't break our soul.
I'm not attacking y'all, but I just want you to understand that
What's my quote here?
you're a contributor, and it's appreciated. But everybody doesn't trade the indices.
Yeah, I know. I took a trade on, I think it's USD JPY.
Uh-huh.
If you go on that, I can show you.
I thought you were sick.
I am sick. That's why I'm eating soup.
What's up, guys? I've been trying to make this video.
Let me see. USD.
Well, you didn't ask me. Oh, are you better now?
Yeah, you
Hope
better.
you get well
I
soon.
assumed
You
were
didn't even
because
say, "Oh, hope you get well soon." All I hear is
I did say get
know,
well.
daggers being thrown. Gosh,
Yeah,
can't even be sick for a day.
well, hopefully you're better. Hopefully it's not COVID.
It's all right. You just that time has passed now. You didn't even say anything. See what you're like. You just want to work us.
Here you go. Show us the trade there.
If you go down to the if you go to the 12 hour. Yeah, so it tapped into that order block.
12 hour. You said
let me see. Tapped into that order block, yeah. So on the 12 hour, what did I see now?
Was it a buy or a sell?
It was a buy. So it tapped into that order block, and then I saw it was gonna run up and then tap into the other order block on the 6 hour.
Right here.
If you go to the 6 hour. Yeah, so I got that wick. And if you go down to
Were you hyper aggressive, or did you trade a smaller last half?
how much did I make on that one? Well, I did make 7K, so I was probably hyper aggressive.
Okay, you did make 7K. Yeah, you were hyper aggressive. I mean, it's good when it works, and it's horrible when it doesn't.
Yeah, so if you go down to the 4 hour. Yeah, like, can you see that? Sorry, 1 second, I'm trying to look on mine. Because I put order block in, fair value gap in. So I think I saw, it was at the time where I saw price was going to run up. I think it was on the 4 hour, the 2 hour. So I put a fair value gap in, and then I put a gang box in for that long bearish candle to the left. And you can see that order block, that bullish order block going for it to tap into. Yeah, so all of that area, I just put a fair value gap,
So
like imbalance, and then I saw price was running up into that imbalance, but I already had the imbalance marked up anyway, and then it was in my imbalance, and then I saw it was gonna go up further, so I marked up another box, and then I only expected it to go to the 50%. So I normally just take profit at the 50% instead of letting it run the full way, because I don't know if it's going to or not.
So you took profit at the 50%, you still made 7K?
Well, yeah, shut up. They literally.
That's just horrible, man. That's bad.
Why?
You were over leveraged.
Pardon?
I said you were way over leveraged.
Yeah, but only because I was in profit, and then it shot up even more, and then I just ended up getting more than I expected to get. I didn't expect to get that much.
Well, lucky you. That might be why you got sick.
I did that when I was sick.
Oh,
Yeah, I got sick because I went into work. But that's another story for another day.
are you biased for the buy up?
Yeah, because it's tapped into this monthly order block now, bearish order block. So it should be buying up. It's just tapping back into this bullish order block.
Oh,
Sorry, it's tapped into this bullish order block. So it should be on its way up now. Sorry.
we're in agreement. And the
Is that OTE?
What's that?
Is that an OTE?
OTE, what's OTE?
Optimal trade entry.
Okay.
It's
American
on the-
abbreviation.
Eyeballing it.
Sorry, Todd, what is this group?
The text group. It's
Yeah,
it's
what is it?
swing trade group. It's 5 o'clock people.
Oh, sorry.
You know, I mean, you're welcome to do it, but you're not a swing trader. You're like a super scalper.
I'm not a super scalper.
So what are you?
I do look at swing trades. Like I saw this as a overall.
Well, you're always
Trade.
welcome to the call. You know you're welcome to the call. But
I just don't feel comfortable yet taking swing trades. I
well,
like to be intraday, but I do look at the higher time frames, which give me an overall,
so why don't you
confidence
join the
for
5
my
o'clock?
trade.
Why don't you join the call regularly?
Because
When-
that's at 10 o'clock at night when I go to bed.
Oh, okay.
Yeah.
I thought sometimes, the information you have is worth losing a little sleep over.
I have to get up early in the morning.
I could trade the you say you don't even trade the DAX, right?
I don't like it. I've tried it before and I don't like it.
Elfie trades the DAX.
Yeah,
And-
some people like it. I just don't like it. It's not for me. But yeah.
I both trade that wheel strategy.
Yeah. What did I? Yeah, I think I'm going to come out of that now.
You say you're gonna what?
I'm going to stop doing it. Oh, Alicia said she hates it. So does Kenya said she hates it as well.
You hate the DAX?
Too choppy, exactly. German 30 is too choppy at times. Sometimes it goes the right direction, but I haven't tried it with smart money concepts yet. But I prefer US 30 or
You know what? I've traded
or getting a JPY pair in the morning, because I find like JPY pairs in the morning
they really move.
in GMT time, so British Standard Time, they move really well. So London session, JPY pairs move really well. And if you look on Forex Factory, all their news comes out at 12 o'clock at night. So
Why do you think I trade this pair?
12 o'clock at my time. I don't know what time USA time would be.
It's about 2 a.m. At least
Yeah,
where I am
2
now. Yeah, 2 a.m.
Yeah, 2 a.m. or something like that. So, but I've found lately that I've been finding a lot of trade setups on USD JPY in the morning.
Yeah, I agree. And not just UJ, but GJ, EJ. UJ has been the big time mover lately. But like prior to this war, GJ and EJ moved the best. But you're exactly right. At 2 a.m. over here, those pairs are smoking, man. And they normally move until about 10 a.m. So you
Yeah,
massive moves on those things.
yeah, I got this move at like 12:30 my time, but it went into the fair value gap. So I was hoping to get the sell into the fair value gap, which is if you go like across to your left, you'll see a fair value gap, like an imbalance to the left-hand side. I think on a higher time frame. Let me check mine.
Oh, you
Looks
mean
like it's in it now. Yeah.
On a 12 hour, if you go to the 12 hour time frame, please. And then can you see that
Well, I have it marked.
above that bullet, above the green line that you've got marked,
Yeah.
you see that imbalance. So that was my target to collect to get in for an entry, because you know that it needs to fill the imbalance. So I like to fill imbalances basically, and then wait till it hits the target.
In 2 hours, it would be right here.
Yeah, so it was, let me see how much pips it was. It was 87 pips, but you know, you can still make a lot of money at 87 pips.
Trust me, I know you can make a lot of money.
Yeah, I made a lot of money off. Let me see, I got
I don't
half.
make a lot of money compared to what you make, because you know, I wouldn't have made 7 grand. I caught a GJ move that was larger than the one you caught, but
Yeah, I got 20, about just probably like 30 pips out of that 28, out of that 87 pips. But yeah,
I mean, you're way strong on your lot size, but it works for you. So
I
that's
know
good.
I need to calm down. I need to calm down. I need to make my trading plan and calm down my lot size. I'm gonna start trading pairs soon though, because it seems like you know, I need some more diversity in my trading.
Yeah, I'm heavy-handed at times, but I caught like 100 and some pips, and I ain't make no 7K.
Can I ask a question?
Sure.
I didn't quite follow what you said you did, Leandra, but I know it's what you do all the time. So can you walk me back through like which time frame you identified the fair value gap? I thought I heard you say you got in for a buy, but I didn't see a bullish order block. So did you get in on a bearish order block?
This is the bullish order block right
But
here.
if you go into the high, if Todd goes into that higher time frame where he's got that massive blue block, that
Okay.
is a bullish.
Daily order block.
Yeah, there you go. There's the order block. That is a bullish
Okay.
order block. And
Okay.
I think, is that green line the 50%?
Yeah, it is.
Yeah. So
Price work structure to the upside. We know it's
Mm-hmm.
going to come back and tap in, is what she's saying.
Okay.
you following?
Yep.
So then obviously, because Todd said that the JPY pairs haven't raised their interest rates, so they need to go back up, or they, you know, their direction is bullish. So obviously they need a retracement because they've been going up for months now. So obviously we look on the higher time frame. I think that was the monthly he was on. We saw that massive.
But
That's the monthly.
The monthly or the daily?
It was from the daily. So that was the daily. Yeah, but I start from the monthly, then work my way down through the time frames. So on the daily, you've got this big, massive bullish order block. But then inside that order block, if you go down to the 12-hour, please, you can find there's a smaller bullish order block, which is just like probably like a few like 100 pips above the 50%. And then if you go above the 50%, there's a fair value gap. Can you see that big fair value gap on the left?
Okay, so you just found
where the green candle is. Yeah,
right
where the green candle is.
Right above the order block on the 12-hour, which is still inside of the daily order block.
Yeah, exactly. Yeah. And then so I was hoping to get in for the sell into the bullish order block, but I didn't get that. So if I went down to another time frame.
Wait, say that again. You were hoping to get into the sell?
Yeah, can you see that red? Can you see that red the red candle going into the blue box?
Yeah,
to the green line. I was hoping to get in for that, for the sell, because I know it's going to hit this 50% green line, or 3/4 of the way. I know it's going to hit, because there's a big bullish order block on the daily, and then there's a smaller order block on the 12-hour. So it's bound to enter into this order block and hit at least 50% of it. Do you follow in?
I'm following.
Yeah.
I didn't know that was a thing, like a rule that it has to go into 50% of the order block.
Well, it's not a rule. I just find like I don't know. I'm still working this out myself.
Well, I mean, listen, there is a line of thought, right? There's a line of thought out there that says that you can get that move is going to go 50%. This is why I even mark.
Well, if it's got a smaller order block inside the bigger one, I would think that it would hit the smaller one on the 12-hour as well as the daily. Like that was my thought range. And plus, going over Todd's stuff as well, he said something about the gang box. So
there's a if you want to watch a short video, I'm not going to play it here, but you see this 3-minute video right here?
Yes, Smart Money Academy.
Yeah, it's this girl. She will explain and she'll tell you to mark up to 50% every time. Now, I don't subscribe to a lot of what she says. Like she only uses one type of order block and all that good stuff. But the point is, she'll explain it to you and you'll get a better understanding of why you use 50%. Okay.
okay, can we go back to the charts now?
Yeah.
Do you get that, Kenya? Or anybody else who didn't get it?
I think, I mean, yeah, I'm following. I'll probably go watch that video, but yeah, I'm following. So
Yeah, I'm probably gonna have to watch that
looking
video.
to get in for the sale, but then what happened between there and you making money on the buy?
So I missed the sell, and
You
then
missed your entry?
yeah, I missed it going into I just missed price going into my fair value gap imbalance. I missed it. So when I look back, I was just like looking at the charts and I was like, oh snap, if you go down to the 6 hour, I think the 6 or the 4 hour, go down to the 6, please.
There's an order block right here.
Yeah, there's order block. So if you see on the 6 hour, there's an order block that price might tap into and then start pushing back down again. So when I saw, I think it was on like the 4 hour, I think I went down to the 4 hour. So I'm always changing time frames. Yeah, I think I saw it like I feel that green line just going past that red candle and entering the other big red candle, that imbalance in there. And I was like, oh, enter, it's gonna hit. So I just marked up a box. I didn't enter for the full thing because it was already in the fair value gap. I didn't enter for the full thing. So I entered for 30, it was like 30 pips. Let me check. It was 56 pips of that candle, starting from the order block, the bearish order block down. It was 56 pips. I marked up a fair value gap and I got in for, I got 28 pips of that. Hello?
And so the first bearish order block that you saw was on the 6 hour?
Yeah.
And you dropped to the 4 hour to find.
Yeah. And if you go to the 2 hour as well, go to the 2 hour. Yeah. So yeah, there we go. So if you see that,
I guess I'm just trying to figure out how you knew to get in for the buy. Like I understand the fact that you are playing in between order blocks and catching the fair value gap. But when I look at this 2 hour chart, I would not have known to jump in for the buy.
Well, I
if
think
you go down to the 1 hour, go down to the 1 hour. Yeah, there we go. Got it. So
I
if you
wouldn't
go
have
down
known
to the,
that when you
go
said
down to the 30 minute, can you see that bullish order block there? There's a bullish order block there near the red line. If you go down to the 30 minute, please. 30 minute, up, up, up. Okay, and can you zoom in, please? Can you see that green doji candle tapping into that bullish order block? Up, 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 up. No, to the right, please. To the right, to the right, to the right. There we go. It's tapped in. Fill that. No, down, down, down. Tap.
Oh.
If you make it bigger, like just lengthways. Yeah, there you go. It's tapped in.
This right here.
Tapped into that bullish order block. Filled the imbalance. Is running back up. Running back up. There we go. That's confirmation.
I think that's the part where I'm lost, is because you used a smaller time frame order block that was counter to the trend and wrote it up, like all the way up.
Yeah, can I have a crack at explaining this?
Yeah, please, please, please.
Okay, so here's where I think that there's a disconnect, Kenya. You can't take a trade like this if you don't have an understanding of what you're looking for. So
Okay.
we understand that on this daily chart, price pushed up, is pulling back to hit this order block, right?
Okay.
You have to have that basic understanding.
Yes.
Me and Leandra said it's going to at least hit this 50%. It's just, we understand that. Like, if you don't have that understanding, it'll be hard to even catch a trade like this.
Okay.
Now, what she's saying is she was gonna try to catch this down move into this 50% mark, because it's like a big joker guarantee. We know where price is going. It's going at least to this green line.
Right.
Now, I haven't talked to Leandra about this trade, but I have the same markup, right? So I understand why she was looking for it. Now, what I also understand is once it hits this order block, we will get a reaction, right? It's not just going to hit the order block and keep going. It's going to hit the order block and bounce off of that, bounce off of it, right? I'm biased for the buy up eventually, but as a trader, I have an understanding that it's going to hit my target and it's going to react. So what she's saying is she dropped down, right? And on the 6 hour, this order block right here would support a reaction. If it bounces, where is it going to bounce to? There's a good chance that we can use this 6 hour order block as a price point or as a target point to buy the market, right?
Well, okay, quick question. Was there a reason why the 6 hour order block is significant, given that your overall
It's not, but
analysis on the daily?
well, so listen, all we're looking for, right? All she's looking for is a target. You have an understanding that you're going to get a bounce. So the
Yeah.
only thing you're looking for is a target for that bounce. If I go to the 8 hour, right? There's not really a target. Maybe it's you can say the top of this candle, but I see that there is something here on the 8 hour. You got to understand that these two candles aren't here yet, right?
Okay.
But if it bounces from this green line, there is something here that it's probably going to bounce to, right? What I would have done is I would see these moving averages lines. I'm always a fan. Remember I told you, if price moves away from the moving average, it's coming back. Price
Yeah.
moves away from the moving average, it hits, it's probably coming back to the moving average, right?
Okay.
So if it's coming back to the moving average, I don't have to be greedy and try to trade it all the way up into the moving average. I can see what this wick is. There's an order block in that wick, and she happened to find it on the 6 hour. There's your order block. So
Okay.
all you have to do, if you know you're trading from this line to this line, and I'm saying line, but in terms of pips, you have 119 pip target. You can do a lot of damage in 119 pips. Now, I know on the 5 o'clock call, you're saying, hey man, there's no order block for entry or any of that, right? If you're
Right.
waiting for a daily order block, you'll never catch this move. You have to
Right.
drop down to try to find your entry. When you drop down to the 4 hour, as price is coming back up, you're still not having an order block because these time frames are too high. You have to keep dropping down in expectation that you're going to find an order block on these smaller time frames. I personally would have dropped
30
to the
minutes.
15.
30
Right.
minutes.
Well, I know, but I'm just saying I would have dropped to the 15 minute because
I know, but I drop like, go gradually. And sometimes I drop to the 15 minute. If I can't see what if I can't see any confluence, then I'll go back. But I've seen confluence on a higher time frame. I'll go
Right.
back to the 30 minutes. 30 minute I don't really check for, but if you need that confluence, there it is, right there. It's tapped
So-
into the bullish order. Sorry, carry on.
here's the significance of this. Price finally made it back to this high, right? So you got a retest and a push higher. Now you're above this high. So this tap in is your key that this market is going higher. You got a bullish order block that broke this high, right? Even Kim might agree. Well, I don't know if she'll agree, but hey, Kim, is this a big stretch?
Yes, sir.
Okay.
Can I explain it just so because I know my girl. I know my girl.
Wait,
yeah.
Kim, hold on. Can you let Todd finish his train of thought? Because I think I'm getting it, and then I think you'll probably drive it home when you say
Yes,
it.
yes.
Okay.
So at this level on this 30 minute, you have more confirmation. You have a break of structure, you have a retest, which is this tap that taps into the order block. You're in the trade. You're just taking it to this line. And what she's telling you is, or maybe what she didn't say, is she's hyper aggressive. These 70 pips, she was strong handing the hell out of these 70 pips.
I didn't get all 70. I just got, so you see that that bearish candle on the left, the red one on the left.
On the left.
Yeah, if you probably might mark that up from that width to the other width, that's probably like something like 20, 50 pips, something like that.
Yeah.
But I just got that candle.
Yeah, that was your 50% imbalance mark or fair value gap mark. Was that?
No, that was the imbalance that I got in the end, because I just needed like more confluence when it tapped into that 30-minute bullish order block. That candle was already like halfway, this bullish candle. So I marked up this red candle on the left with a box of fair value gap imbalance, marked it up, put the gang box on it, put a 50% line in, and then I thought, yeah, I'm just getting it for that 50%. I'm not going for any higher than that.
She's not going all the way to this order block, but
yeah, I know. But sometimes it can like retrace, or do you know what I mean? Like jig about. I didn't really trade pairs like that, so I thought, you know what, get the safety, just get to the 50%, and it did, and it shot past.
But do you see the thought process on how you could have taken the trade? This is only a bounce from the order block to this candle, right?
When you say this candle, you mean that turquoise line, right?
Yeah.
Like that we marked up on a way higher time frame that I was totally following.
This daily,
yeah. So that would have been the 6 hour.
All we're trading is the bounce from here to the 6 hour order block. Basically, the bounce from here. So there's another way you can do it too, or another lineup.
Kim might be able to explain it further now.
Yeah. Okay. I think I'm
drive it home, girl. Drive it home.
Yeah.
If you put a fib on this down move, because you see the retracement start to happen, this mark is not even at 38%. So you can have pretty good confidence that the bounce from this order block is going to go at least to this line, right? At least. So this is just another level of confluence. And I used to trade retracement, so I'm very, very comfortable taking a trade like that. Now I would have probably been a little bit more greedy than Leandra, and I wouldn't have gotten paid like that, because I would have been trying to at least get the 38 probably. But the point is, she saw the bounce coming and she just wanted to take it. to a safe spot, right? So she just broke down the charts and went through the timeframes to find an imbalance that she was going to trade it to. And on that 6-hour chart, there's a bearish order block that would have supported, where she could have taken this trade. Does that make sense?
Yeah, I think I'm following, but I'm now very anxious to hear Kim's version.
Yeah, me too.
B3.
Kimmy.
Hold on, I'm coming.
I
Um,
also take entries on a lower time frame.
Hey, buddy.
So even though the 30-minute was my confluence, that okay, it's going up, I'm taking it on I'm looking at the 1 minute, the 5 minute, the 15-minute for, better entries. But yes, carry on, sorry.
That's okay. Ty, can you go to just the daily for me? So, and then can you squeeze in so I can get you to fib like the bottom of that, like the expansion?
From the very bottom?
No, from the one, right?
Here.
No, no, go down a little further. Right there.
Okay.
So can you, you know how we do the supply and demand zones, right? So because it was in the demand zone, that's when you start looking to see if structure is starting to break to the upside.
Wait, what was in a demand zone?
Because of
Wait,
that order block, which broke structure, right? That order block that he has marked up broke structure to the top side.
Okay.
Okay, so that was one thing. The second thing, the other confluence was where he just marked up the fib from the expansion to the top. Remember I was saying how price comes back to the 50% to give pretty much the neckline? Because I think it's going to go back up. It's going to now go back up and then come back to fill the rest of that expansion.
Y'all gonna be mad at me. I don't know what an expansion is.
Impulse move, expansion, same thing. Impulse move. pull back.
Okay, like a rally.
Impulse move, yeah. Rally base rally, rally base rally, right?
Okay.
But I think it's going to go up and come back down though.
Yeah,
But
I
that's
agree with
just
you.
my thought.
I agree. I think that too. But I think that based on the fundamentals, I think because of the recession, all these JPY pairs are going to end up at the bottom, somewhere. But that's neither here nor there. But the right now, we got the impulse move, we got the pullback. Now I want to see another impulse move. I don't think in the long run this is going to break the high if that report comes out Friday the way I think it's going to come out. I think if that report comes out Friday, I think that fear is going to take over the market. And I think these JPY pairs will cook off. Now, USD JPY less than others, but I just think that it's going to break down before it gets to that high. Now, I mean, you got to trade the chart still, and you can't anticipate it breaking down before it actually breaks down. Like you can't just say, "Oh, Todd said it's going to sell if if these numbers are bad," and just start selling it. Like I think the US 30 is going to sell too, but it bought up, that 1,000 points that we thought it was going to buy up, right? And I remember thinking that that was kind of steep for it to buy up, even though they're raising interest rates. Anybody else think it was a steep move for the US 30 to go up, even though
That's what I did. I mean, I just couldn't trust it. That's why I got marginally paid.
Yeah, so it's the same concept, right? Like we have a thought process, but you still have to watch it play out on the charts. But that's I think it's 3 different ways you could have gotten into this trade, or you have to, 3 different ways you could understand that this trade was setting up. Right? Like Kim used the very long approach, you know, which is nothing wrong with that. Leandra used, you know, the short approach. There's nothing wrong with that. I mean, they all led to the same thing. I would have just started from right here, this daily order block. I see the break. I understand that price is coming back to tap in. I mean, it's the same exact trade, 3 different ways that you could have saw it or recognized it and entered it.
Right. I think what I like, I mean, I appreciate all 3 of y'all's perspective, but I think what I like most about Leandra's is that she uses the macro to take micro trade, like trades on the micro level. So
Well, I
it's
think everybody
down.
does. I think everybody should do that. I mean, so eventually that's where you will be, right?
Right.
Everybody should use the macro to take micros, because without the macro, you're guessing. You know,
and
like,
plus you need to get a good entry on a micro level for the macro move. Because
right.
you don't want to get a, you know, a rubbish entry, then you end up in drawdown. You're just like, hold on. You know, so that's why I said I look at the higher time frames like a swing trader, and then I get in on a lower time frame at a time when I'm looking at the market to see a setup. And then if I see an opportunity there, then cool, I'll get in. If I don't, then cool, I'll leave it.
Yeah, so what I think that translates to is live trading with Leandra. Sounds like a plan. No, when you're ready.
Exactly. Huh? Hey, Kim, whenever I drop that buy signal for that Euro AUD, and I know you don't trade Euro AUD, you know, but did you even look at it?
Mm-hmm.
Did you?
I did.
What time frame did you look at it on?
I didn't like all those wicks. That's why I don't trade your AUD.
But in the wick is what keyed you in.
I
That is a lot of
see.
that is very wickety. That is a lot of wicks.
But Kenya, did you look at this trade?
You know, Kenya did not.
I looked at it and I knew what you meant when you were like, I just bought it. Why? And I was like, that's exactly what he's been telling us. However, I despise EA. I did not get in. I also thought that you were already in. So when you came back and I marked it up just for kicks and giggles, and I had no offense, a better entry than you did. And I doubted myself thinking, oh, Todd's already in. He's been down at the bottom. He's been riding this all the way up and I'm getting in too late. So it's interesting to see that I would have still been tapped in at my quote unquote better entry.
I don't think your entry was better, but what?
It was. I'll tell you what it was. Hold on. Look at it.
This is my entry. The price never came back to my entry.
No, I think she got in.
Arguably it did on a lower time frame after the wig happened.
I don't care how low this time frame is. You price never came back here.
No, she got in because I think you told us about the wick.
I told you all about this wick.
On the daily. It was on the daily.
Yeah, that's that wick right there.
Yeah. Right. But then
as soon as I saw that wick, I got in. And then I put it in the chat. I got in the trade and then I put it in the chat.
And we went and reanalyzed it, and I think Kenya got in at a lower low somewhere.
Anywho,
this is what we were just saying about the getting in seeing a higher time frame analysis, but getting in a lower time frame entry point, like you said, Kenya, because these wicks, for me, that will be no go, because there's too much wicks. It will wick you out when you're not looking. I can't do that as a swing trader.
Here's where I got in
out and get my money.
I got in right here. Price never came back.
Where you got in where? Because I thought you got in at 45.96 and I had mine getting in at 45.58.
145.87 is when I got in the trade.
Yeah, I thought I saw an opportunity to get in at 45.58.
No, not unless you saw this trade before I saw it.
No, I don't know. Maybe I saw it as you were getting in. I don't know.
Yeah, maybe.
But I saw it like when you said I just bought it. Why? I saw exactly why.
Right, but here's my point, guys. Whenever I called this trade up, I mean, it immediately went up. Immediately.
But it tapped into that 15-minute order block. To left, down, left.
Yeah, like
Left,
this.
left,
this
left.
order.
Left. There you
That,
go.
yeah.
Well, okay, yeah, I get it, but I didn't see it until after, right? I didn't see this trade until after, you know, because what happened was
So you
I like
think-
to go through about 2 in the afternoon or you know, sometimes 1:30. I like to get on the daily and just see which prices are wicking, right? This wick tells me everything that I need to know. If
What does
wick-
it tell you? What does Wix tell you?
Well, this
Liquidity
wick,
grab.
it
Well,
tells me this is the liquidity grab. All this wick did was grab liquidity. Once they grab liquidity, the market is going to cascade to the opposite side,
Just what just like USD JPY did.
just like ICT said.
Yeah, stop run is the way he calls it, I guess.
So there's no need to wick right here. If you look at this market, if you look at this market, there's a wick right here. There's another wick right here. Why do we need the wick again?
So Todd, while you're saying that, if you can go up to the consolidation prior to this, that swing high before that, you see how that wick came down?
This one?
Yeah.
Okay.
So if that were to have happened, because it's in an order block, right?
Okay.
To the left there's an order block to the left of that. And if that was to have happened, no, right? No, in the middle, right there.
But this is past that order block. But anyway, go ahead. Ask the question.
So that's what I'm saying, because that would have wicked down to grab liquidity. It would have been an assumption to think that
Market
it was
going
going to the top side.
I definitely agree with you, Kim. But now, in a vacuum, you can ask that question. But I don't know what happened on July 14th, but it was probably a news-related event that caused this wick, and then the price ran down. I don't know what happened on July 14th, but I guarantee if you look back, it was probably a news-related event that caused the euro to push down. There was no news-related event here. The market is at exhaustion, right? If you look across, the market is at exhaustion. We need a retracement. There are hundreds of reasons of confluence why the market is going up. This is probably due to a news-related event with the war. You know, maybe it was the gas, you know, Putin with the gas, but this is also a bearish order block too. This is not a bearish order block. Does that make sense?
What was the bearish order? Oh, okay.
But every time I see this, every time, without question, every time I'm taking that trade.
Hey Todd, can you wait before you leave this? Can you fib the up move from the previous lowest low right there to the left? Like the big one.
This right here?
Yep. Can you fib the up move and see, did it just come back to the 78% basically?
Well, pretty much, yeah.
Yeah.
Yeah, I wouldn't have gotten the one I was just talking about. I wouldn't have gotten in that anyway, because it was in the middle of the zone. But it was in the middle of the. It was in.
You say you wouldn't have got into this one?
Yeah, I wouldn't have gotten into
definitely
that
would have.
because
If
it's
this
in the-
wasn't a bearish order block, right? If that
Mhm.
wasn't a bearish order block, I would have taken that for a buy, right? I don't know what happened in the vacuum, but I guarantee you it was news that pushed this down.
Mhm.
And even if you did take it, I mean, that's why you have a stop. I mean, anyway,
But I mean, the next day it would have paid you before it went down. But that's not even the point. I'm taking that every time, all day, every day. That trade is going to happen. And I just want to show you some of the trades that we got. Do y'all remember this USD CAD trade? Y'all remember this trade right here?
nope.
Man, I wish Selena was on the call.
No, I remember the trade.
You remember the trade?
Mhm.
We caught this trade off the same setup. Trade runs up,
Mhm.
right back to your OTE. And look at the second move of that trade.
Mhm.
Now, at the same time this trade was going on, the same day we called out NZD USD. April 5th. Swing high, we wicked it. Same day. Same setup. 740 pips. 740 pips, yo. You can't make this stuff up. There's no way that I can possess this knowledge and ignore that setup. No
So
freaking
the
way.
wick, so the wick has to happen and then the candle close below the high. Is that correct? Is that what you're looking at? Is that what you're seeing?
What I'm saying is we just wicked the highs in this market. And
But I'm
on the-
saying all wicks are not created equal,
Well-
right? So if you look at, like, even if you go see, okay, so you saw that wick there. If you go over maybe like a week or two, there's a wick, right? Where your dotted line, no, in that red zone, in your red zone. And you see there's a wick right there, right?
If you had traded this wick, you'd have still got paid. You'd have still got paid.
How?
Well, let's look at it.
Look at the swing low.
If you had traded this wick,
Mhm.
let's say you would have got in right here. You still got paid 105 pips. If you wick these high, this is what made this powerful, right? You have a swing high, which is a protected high,
Mhm.
right? You agree that the swing high is protected?
Mhm.
Why do you need to wick that high? If it's protected.
To grab
To
liquidity.
grab liquidity.
That's it.
And then there's an order block to the left of that on the left side.
Well, I agree with the
No,
order.
not right there, to the far
I
left,
know.
to, yeah.
You're talking here, but you don't
Yeah.
even need to worry about this. This right here tells you everything you need to know. Swing high, we wicked it, it's over.
So the protected high got
Protected,
violated.
not taken out, it's over.
Mhm.
No, it's Killian said it's protected until it's unprotected. If they take it out, it's over. You know, the same could be said for this is a swing high. 1, 2, 3. Price comes up, takes it out, it's over.
Mhm.
But every time I see that, I'm going.
You know, so the point of this whole thing is it was a counter trend trade, and that's what we should have been doing in the first place.
You said it was a counter trend trade.
Uh-huh.
Maybe it was a counter trend trade. I guess that's the way of looking at it, but I just think you're ignoring the bigger picture. So if you look
No,
at this,
I get
right,
what you're saying.
so is this a counter trend trade? Would you take this trade and sell it?
No, I would sell it because it's in the overall downtrend.
Okay, and they took out these highs.
see, I wouldn't have looked at it like that. I would have been where you have marked up that institutional candle. I would have gone down maybe to the 12-hour, found the order block.
In here,
Mm-hmm.
okay.
And well,
I would say the order block is here.
yeah, it would have had to be at the edge of a zone, a swing high. So I would have been looking at the so we went down, came back up to the 50%. Coming back to the close to the 78, right? It tapped into the 78. Now, I still would need to be looking at the bigger picture because I don't know if it's
What bigger picture we need to look at?
So no, you're doing it for a sale, right? But you're selling it from the
Hey,
blue.
this is real time. I mean, there's 1,000 different confluences.
I wouldn't have been I would not have been buying it up. No, I would not have been buying it up.
I know, but no, it did buy up already.
So I did it.
What did we just get finished talking about? Price gets away from the moving average. It touches, sell it. It gets away from the moving average. It just touched. I just showed you a chart. On the weekly, it touched the moving average. On the daily, you got your 78.6. It wicked your highs. You freaking sell this, man.
Okay.
Still not selling it.
Yeah, I'm still not selling it either until it gets up to closer to.
I know, but this is the problem. I mean, look, y'all.
Because if you look at the weekly, if you go back to the weekly.
Oh, sweet Jesus.
Sweet baby Jesus.
Let me go back. Let me go back.
So if you went to the weekly and you have the imbalance marked up.
Up here?
Right.
Okay.
So that's where I would be expecting price to go back.
Look, what about this imbalance?
But that's not, you
No,
gotta
we gotta talk about if you're telling me right now that you're not gonna sell this because there's an imbalance right here.
No, because what I'm telling you is I would be waiting for price to get there before I sell.
It ain't coming here. That's what I'm telling you. It's just like it didn't come here. It didn't make it.
Well, that's because that's a whole nother swing high. You got a whole swing high, right? A base rally. You got that down move, then you got an up move. That would be my swing high that I would be looking for price to either break past or come to for the sell down.
Okay, let me explain this to me, Kim. What is this right here? Break a structure?
Yeah.
Came back to it.
No, and that's not what I'm talking about right there.
No. I just want you to explain it to me.
Break a structure.
Break a structure, retest.
Yeah.
Structure, look like a retest to me.
It is a retest.
What I'm saying, Kim, is if it didn't do it on that other one, why are you holding this to a different standard than
no.
the other?
Well, first of all, there's a weekly bullish order block, right? There's a weekly bullish order block.
Right here.
I would be expecting that.
There's a weekly bullish order block too. So go ahead and explain it now.
Those are equal to me. I would
That second candle makes it a bullish order block, though.
This is bullish.
That one, and then if you add that second one, it's a bullish order. It's a bullish order block.
Correct. So I would not. The thing is, I would not have bought that up. Is what I'm telling you.
But yeah, I wouldn't have either. Because it's a downtrend, but what I'm telling you is it's time to sell NZD USD. Sell it now. You know, it's what I'm telling you is.
Wait a minute. Let me.
Every chart is telling you
sell
me.
Well, I'm still waiting for Kim to explain why this up move, she wouldn't sell this current up move
because it didn't get hit.
Looking at that one above it, you know, I mean, that's kind of what I'm still waiting on to hear the rationale.
You hear that, Kim?
Wait a minute, because what would you say?
Go back to the other chart, Watu. So you see those turquoise lines.
Mm-hmm.
See on the upper turquoise line, you know, price went back to that break of structure area and then it
Correct.
pulled off.
Yeah.
So you're saying you wouldn't sell the current one. So what I'm trying to understand,
No, I didn't say I wouldn't sell. I said I
Oh,
wouldn't buy.
Oh, I thought you said you would sell. That's what.
I know. I didn't say that. I said I wouldn't buy. I would be waiting for price to come back to my high before I sold. That's what I said.
So this, yeah, you're saying you wait for price to come here before you sell.
Correct.
so
It's not
what,
coming here.
what I'm asking is why are you waiting on it to go up to that zone?
Because I don't trade the middle. Because that's where I get screwed every time.
But if you look at that other one, so you just wouldn't have traded that other one either, then is that what
I
you're
just
saying?
wouldn't have traded it.
This one right here.
I'm going to wait for it to come back to the expansion, the top of the expansion, to get the bigger move. Correct.
Okay. I mean, that's cool.
I mean, but I get what you're saying. But yeah. I always get screwed
So
trading.
Kim, Kim is that trader that will wait 6 years for a price.
Shut up.
Well, I mean, Kim don't lose no money though, so you know.
I agree. I agree.
Very disciplined, yeah. Oliver Velez would want to marry her.
That's thanks, but no thanks.
I ain't got any thoughts.
Kim's discipline is forged in concrete.
Kenyon, you say you gonna make I know that's right, Kenyon. Because I'm gonna tell you, man, like when I see this wick right here, man, you ain't gotta tell me nothing. I'm going straight to the store and get that bag because this is about to pay you. And fundamentally, it's on par too. But anyway, y'all can dislike money if you want, but if you follow ICT's concepts, this falls within that concept.
Yeah, because he specifically, I think, talks about the daily time frame when he talks about those stop runs.
He does talk about the daily. I mean, but you know, to me, it's just 2 or 3 other confluences there on the chart. So, you know, everybody has to trade what makes sense to them and what they see, not what I see and what makes sense to me. All I'm saying is, if you subscribe to something, you have to do it every time, in order to be successful at it. You know, it's not an emotional event. You get in a trade, you're either going to win or lose. And in my opinion, I mean, if you lose this trade at this wick, that's 51 pips, 52 pips. You know, I mean, that's nothing, you know, to Ruby anyway. Ruby's all her trades with 50 pips.
That's a lot of pips. No, her pips were 100 pips. That's a lot of pips.
Hey, I know that ain't nothing to you. You know what I'm saying? You can take them 50 pips easily. But you don't have to just arbitrarily, you know, hop in. You can drop down and get your entry off of the 15 minute. You can wait until it breaks structure to the bottom side. You know, there are 1,000 different ways that you could find an entry into a trade like this. And you know, Kim is still looking for the buy, but everything on
No. See, when you break it down, now my sell would be
hell no, you wouldn't ever sell. I see all kinds of reasons to sell, like, you know.
My sell would be from that top though. Somewhere from the top of the zone. Not in the middle.
But Kim,
Nope.
the funny thing here is you see this retracement, right?
Mm-hmm.
Maybe this retracement gets back to the 78.6. There's an imbalance right here. There's an order block right here.
Oh, it is. I'm telling you right now, I already know because of the way the even knowing what I know, that It's at the 50%, 618 is probably about to come down, create a second leg to then go back up to the 78. I'm still not trading it until it gets to the top of my zone.
Well, but
I have subscribed to the Sean Tide.
I agree, but this is 78.6 on this 15-minute chart.
Yeah, that's a 78, and there's an order block right there, so it's probably going to go up there.
I know. So you're saying you would take this trade based on this time frame?
Yes, because it is at the top of the swing high.
Yeah, I love when I can convince.
You didn't convince me. You didn't convince me of anything.
Hey, when I can convince. You got the diamond grip on that losing strategy. I can convince you to come over to my side. I love it. I'm glad we could do business. I feel like I got to argue with you. You remind me of Alicia so much, man. I got to argue y'all down about a winning trade.
Well, don't give yourself a heart attack. Todd.
Leandra, did you agree with the setup?
I kind of just zoned out when you guys were talking.
It's kind of giving chalk vibes. Like it broke to the upside, it continued with this upward movement, and then it broke to the downside. Now it's pulling back, ready to sell off.
Yeah, to the institutional account. I agree with you.
Yeah.
I just want to notify you, Todd, about what Alicia put in the chat. She just wants a quick recap on the fundamentals. I don't know if you've read it yet. I want to give that a quick read, just so for the people in the back who are.
Let us talk about that. Alicia, you still
the weekly analysis? Yeah, I think she is.
The USD did get weaker. Yes, that's true.
Can you just go over it for me as well? Because I didn't understand that as well. How the the dollar got weaker when the interest rates rose, and last time the dollar went up. Well, this time went down.
The dollar got weaker on recession fears. That's what made the dollar weaker, right?
Oh, because we're second
quarter
of so the GDP made it go down.
Yes.
Yes.
Okay. Now, Friday's NFP report is going to either add fuel to the fire or
sorry, say that again.
Friday's NFP report will go a long way to seeing if we're really starting to feel the effects of a recession. Like if that job report is worse than expected, then we're panic just take over. And,
so what is worse for the job report? Because at the moment it doesn't look too bad.
Well, there was a negative report. The Philly Fed put out a negative report right before we raised interest rates.
Hey, real quick, does that Forex Factory, I mean, it should have what's expected already on there, right?
It has a estimate.
Yeah, so what is expected? What are they projecting?
But it wasn't really that bad last time, because I said that to Todd.
Let's not worry about last time just yet. What is the forecast right now?
Well, what the Fed said in his meeting, he said that, well, we've never had a situation like this when unemployment is like fairly low. If it said unemployment is fairly low, but there's loads of jobs available out there for people to get. So we've never had that in a recession before. Normally there's no jobs and people are obviously unemployed.
So I think we're looking at a 5% basically.
That's for Canada. That's for Canada, no?
Is that Canada?
Yeah, it's Canada.
Oh, my bad.
You got your glasses on.
USD.
There it is right there. So
3.6.
One of those columns.
3.6.
So they're forecasting 3.6, I guess was the last time. Is that what's forecasted? This
forecasted right now.
Okay, so what it's basically saying is if the number comes in above 3.6,
You're in trouble.
it's gonna be bad. If the number comes in at 3.6 or lower, then it's good. So if it's 3.6 or lower, then you won't get the sell-off. That's the assumption. If it's higher than 3.6, then you're gonna get a sell-off in the indexes. Now, what that means for those pairs, I'll let him talk because I'm not good with the pairs. I don't usually bother with the pairs.
It's also going to sell off in the dollar, and the JPYs are going to sell off. The JPYs have already started to sell off, but they needed a retracement. So this can be looked at as a retracement. If the U.S. economy does not falter, if the U.S. economy, if we don't lay a bunch of people off, then those JPY pairs will all rebound and probably start buying again. But if the U.S. economy shows signs of cracks, just sell the JPYs, man. That's all I can tell you. Just sell them because they're gonna go to hell.
Wait, say that again in relation to what Sean just said. So if the NFP number is greater than 3.6%, then the JPY pairs are going
Down in flames, like fast.
So and you're saying XXX JPY or JPY XXX?
There's no JPY XXX.
Everything is.
Everything XX.
Why does that correlate to
Wait,
the
what?
JPY pairs?
Well, listen, let's talk about this, guys. I feel like we talk about this every week, but it's very important. There's nothing wrong with talking about it every week, but write this down, replay this over and over. The US economy is the gold standard economy, right? Like we are the leading economy, right? And listen, I know that in real life, China is probably a bigger economy, but you know, to this Forex world, the US economy is the gold standard. So if the US economy slows down or goes into recession, every other economy is going to be expected to follow, right? That is why when people see the US economy with showing bad numbers, there is automatic fear. Investors who actually have big dollars in these different commodities or these different asset classes are going to start taking their money out of those risky asset classes and putting it into the JPY. That's how it works. It's how it's worked for years. So it will be the same thing now. Now we already in a technical recession, and you already see, if you look at any JPY pair, what happened last week?
It dropped.
That's right. Every one of those JPY, even the USD JPY, they all dropped. They all dropped. And the reason why they all dropped is because technically we're in a recession. Now, I know that the Fed and the president keep saying we're not in the recession. Why are they?
Because of the 2 negative quarters were technically in a recession, but the Fed and the president keep on saying it's unlikely we'll go into recession because of how strong the job labor market is at the moment.
Right, but even though they're telling you lies, the investors are moving their money because you can see on these charts what's happening.
Mm-hmm.
So I guarantee you, if we get a bad jobs report, I guarantee you these things will come way down here. Those things are going to cook off fast, you know, like it doesn't take long for those JPY pairs. They will get to the bottom fast. So if you see that, you don't have to wait for me to tell you, but I would go and look for downside opportunities in these JPY pairs. Now, what's the number one? Which one is the number one JPY pair to get into if there's a negative report?
USD JPY.
GJ.
Oh.
GJ is the killer, boy. GJ, man. GJ, because the British pound is the riskiest asset.
And you want me to know everything that's going on in Britain.
That's why I need you across the pond. I need you to keep us up to date.
Yeah, but it's so risky because they don't tell you anything.
They keep everything under wraps.
Hey, we need you to form a relationship with the royal family, you know, so we can
Ugh.
we can
They're
get
the
some-
ones that are taking our money, taking taxpayers' money to pay for their horses and everything.
see they learn from the US guys.
No, no, Britain's always stole from other countries.
Or have they?
Anyway, we won't go into that.
So like this, oh man, yeah. If that happens, guys, I mean, there are going to be great opportunities to sell, and they're going to be moving like together. They're going to be cascading down. You know, I kind of hope the job report is bad, to tell you the truth, man, because that's when we can fill our pockets up.
Yeah, but is there any news of you know, big companies laying off people at the moment?
Well, yeah, you read the tea leaves. Some companies said that they were laying off people. They're slashing expectations for the next quarter. What are the mortgage underwriters are being laid off, right?
Well, that was a long time ago. I mean, here's my interpretation of it. We haven't been told anybody's being laid off. What they've basically said is, hey, we're not hiring. You know, we're not going to hire a bunch of new people. But nobody has really been laid off with the exception of those mortgage underwriters. But the only reason they got laid off is because when you raise interest rates, you know, you don't have a million home buyers because people can afford less house because they got to pay a higher mortgage rate. So they don't need all those mortgage underwriters if there's going to be a lot less, you know, mortgage demand, you know. But switching gears just a little bit, you know, I want to look back at the FOMC that happened. When was that? Thursday, Friday, one of those days, Thursday, I think it was.
Sorry, just to add what you just said, Rashad, is that because they hired too much people during the pandemic? Now they've got to, you know, obviously stop hiring to make sure.
Are you talking about the mortgage underwriters?
No, I'm mainly talking about tech. I'm mainly talking about tech, as in like Amazon, you know, that they've stopped hiring and stuff like that.
Right. And I would say they probably hired a little bit too much people, or they were forecasted to hire too much. But when you raise interest rates, it's risk off. Nobody wants tech is viewed as risky. So in a rising rate environment, the first place that people take off the risk or sell or get rid of those risky assets is tech. That's why the crypto has been down. That's why the NASDAQ has been down. So rising rate, tech is coming off the table, you know.
So it'll be like the housing market then that they would look at.
Right. Tech is similar in a way to the housing market, because if they raise the interest rates, then I can't afford $1 million house, you know. Maybe I can at 1% interest or 2%, but if I got to pay 6 or 7, I can't afford $1 million house or $500,000 house. So that's what drives all the buyers off, because at 1 or 2%, maybe the mortgage payment is $1,500 a month. At 7%, maybe it's $2,500 a month. I can't afford $2,500 a month, but I can afford 15. So that's why, you know, you lose the home buyers, and I don't need all these mortgage underwriters. But at 2%, I need 1 million mortgage underwriters because I got 1 million customers wanting to refinance and or just outright buy houses. So that's how all that works in the real world.
I agree. I think that's, you know, I think basically you hit the nail on the head. But
well, hold on. I just want to look back, because I feel like people don't understand a lot of times how these reports, how it all connects in the real world. So I just want to look back real quick at the FOMC, how, you know, number came in at 0.75 and it was forecasted at 0.75. So everybody's expecting, you know, those indexes to sell off, you know, last week, and they didn't. They went up 1,000 points. And the reason they went up is because that number came in line with expectations. So the big takeaway here, I think, whether you're talking about FOMC, whether you're talking about NFP, is when the number comes in line or better than in line, then you're probably going to get people buying. When the number comes in worse, then that's when you're going to get the sells. I mean, I knew we would buy. I was shocked that it was 1,000 points, in 2 days, but I wasn't shocked that it was buying. I just thought we'd get a few hundred. Well, we got 1,000, I guess. So
I think a lot of like banks and investors kind of factored this in though to their pricing or whatever. They were talking about they've already, put in the 75 basis point hike into their predictions already, forecast. So they were prepared for it.
Right. But I guess where I go with it is for us as people that are trying to trade and figure out how to interpret this stuff.
Mm-hmm.
When you get a number that's in line or better, then you can probably expect buying. When you get a number that's worse, you can expect selling. So we always talk about this Forex factory and, hey, look at the Forex factory, but I just get the impression that people don't understand how to interpret those columns. And that's why I think people are still left flat-footed, even though, they know to look at this thing.
Are y'all tracking?
I get it. Yeah, Alicia said, oh, thank you, Rashad, Rashawn, for explaining. So I think she gets it, but it's all worth tracking the news, like what Todd said, just like doing your own analysis and looking at the news, because then you'll understand it more as you track it over time. Like the last few times there was rate hikes, no one was expecting the 75. Everyone was expecting the 50, and that's why it dropped.
Right, because that 75 was out of whack with expectations. This time the 75 was in whack with expectations.
Yeah.
And that's why if you're just looking at the chart suggests sell. But if you
Pikachu.
What'd you say?
The chart
make Pikachu.
Buy. Remember, we talked about it before.
Well, yeah, but what I mean when I say suggested sell is you were approaching those points where you could get a sell-off.
Right.
You're approaching, those equal highs, and you were filling those imbalances. And that's why, I know in that chat that, Terrence, for one, was anticipating a sell, where he's a little bit early, probably because, there was a lack of understanding concerning that report that came out and how it came out in line or better, which is, why we got the buys.
Right. But make no mistake about it, raising interest rates is going to always create sell opportunities for the equities market. The whole point in raising the interest rates is to stop people from spending money, to slow down the economic activity. That's the entire point. And that's what the Fed is trying to do. That's what he said they're trying to do. They want to stop, they want to put a stop to everything. And they want the inflation to fall.
They want it to fall to 2%. That's what he said. He wants it to fall to 2%.
I don't think that's possible.
I don't think it's possible either.
Not anytime soon, or they're going to have to get a hell of a lot more aggressive than in raising those rates if they wanted it 2%.
Well, he said he's going to continue to raise rates because their goal is to get inflation down to 2%, how it was before the pandemic.
Well, you know how many years at the rate that we're raising rates, you know how many years we're going to have to raise rates to get down there?
I know.
I know.
It's still a wide gap.
We gotta take the Canada approach. It had to be 1% at a time. And
like every quarter.
The magic number this year would have been 6%. We're not even gonna get close.
They said like 3.5% by the end of the year. But yeah, it's crazy.
Yeah,
But I
we're-
think if we won't get high employment probably until early next year, probably January, because everyone's going to be hiring for Christmas. People are still going to be spending in Q4. We won't get.
China's on lockdown. You might not even have Christmas presents.
Oh yeah, I saw that news. I didn't look into it too much because I was sick at the time, but I saw a highlight of that.
China's on lockdown.
Yeah, they've got COVID cases.
Yeah, they ain't
Wait.
gonna be no Christmas present. The
But
price
do you
of
understand that's part of what's driving.
inflation.
Yeah, I mean, because there's not enough stuff. Because if China keep locking down, if Russia keep tripping,
Yeah.
Well,
Okay,
that's what the Fed said is as well. He said that there is a lot more demand than there is supply.
Exactly. And
So,
it's gonna be like that for years at this stage. I mean,
Yeah,
You
he
know-
said unless we need to get that under control as well. And obviously it's hard to get that under control when everything comes from China.
there you go.
And then
There-
I was also listening to Earn Your Leisure, and they said the same thing that Todd said about the Everlast,
Evergrande.
China's real estate. Is it Everlast?
Evergrande.
Everlast? Evergreen?
Evergrande.
Ever something. Yeah.
Evergrande.
Oh, Evergrande. There we go. They're the largest, Chinese, what is it? Property developers.
Yep.
And if they go bust, then USA is in trouble, and the UK is in trouble as well. Yeah.
Everybody's in trouble.
So that's one to look out for as well.
Well, that thing has been cooking off for the better half of a year. I coming into this year, I spoke a lot about Evergrande. They eventually kicked they fired the CEO and the CFO. But
yeah,
that's going to be like China's government is going to have to bail them out. And if they have been reluctant to bail them out. They said they weren't going to bail them out. So we'll just have to see how all that plays out. But that ruling class that they have in China are hardline communists. They're not the relaxed communists that they had before. So it'll be very interesting to see how that all plays out. The bottom line is the US and Britain, all these countries got in bed with China, and they shouldn't have. They got in bed with China.
They caught COVID.
Yeah, they did. They caught more than COVID. But China has everybody by the short and curlies, really.
Like that monkeypox, dude.
Yeah, I mean they really messed up. So we'll just have to see how that plays out. But the JPYs are gonna tell us the whole story. If you're wondering why the JPYs are selling, it's because of the uncertainty or the fear that's out there. If we have a bad jobs report, trust me, sell the JPY. Sell the indices too, but the JPYs, indices, I mean, you're gonna have ample opportunity to make a lot of money to the downside. Not just one day either. Those things are gonna cook. Did that answer your questions, Alicia? Now, as far as the euro, like,
Yes, it does. Thanks.
y'all see, what is that, Alicia?
Yeah, that answers the question. Thanks. So just a quick question. Gold should be
Well,
going
as-
up then?
Yeah, as the dollar drops, gold will go up.
Okay.
So if you see, you guys can see my screen, investing.com, on the analysis page, they have a lot of good articles that kind of explain, just like my brother was doing, explain what to look for, right? This gives you a short breakdown, about the US economy and, what the different things could mean, right? this gives you a short synopsis of what happened. Basically, the Fed does not see broad-based decline in economic activity. There's several pockets of growth still, strong jobs and wage reports. So those are the positives. But down here in the next paragraph, he tells you that some companies have started to lay off, even though the economy is churning out. Friday is going to be a huge event, especially if we miss on that job number. If we miss on the job number, no hold bars. So look at this section. You can find a lot of good info. You can find the info on this, on Euro. The Euro is experiencing brief resurgence. That it might not be a sustained buy. I don't think it'll be a sustained buy. I don't think it can be sustained while Russia's in the backyard shooting people. But if you look at the chart suggests that we need a pretty sizable retracement anyway. So now's a good time to take advantage of a retracement. Just mark up your zones and where you can safely take your trades to, like the 50% level. I wouldn't try to trade up to the 78.6. I would just trade safely, trade to the upside to the 50% level. You guys have any questions? So tomorrow.
No, that explains it very, very clear. Thank you.
You're welcome. Tomorrow we will look at and we'll actually go in the charts and pick what we're trading for the churchgoers out there. You saw the markups for the USD JPY to the upside. You saw the NZD USD to the downside, right? Kenya?
I missed it. Say it again.
I know you're not going to be available for the class, or not the class, but the breakdown tomorrow on the swing call. But I said there are two trade setups that I'm definitely going to highlight, and that's this NU to the downside, right? USD JPY to the upside.
UJ to the upside?
Yeah.
I don't like UJ. I can't get an entry.
I'm not saying that you like it. I'm just telling you some of the setups that are out there.
Okay.
Euro USD.
I think I had thoughts on EU.
You say you have thoughts.
I think so. I have to go look at my trading view.
I don't. GN is a very wiki pair, but you can trade it between these levels. If you've traded from the bottom of this red zone to the top of this red zone, it's paid you. It's a little bit wiki for me, but you can find decent setups from if you just trading it from zone to zone. And on the weekly, it suggests that it's going back to the upside. So I haven't done in-depth analysis, but the opportunity is going to be to the upside. Once it pulls back and gives you an entry, you can take it to this upside.
Can we look at EU? Because I think I have it buying up. But
EU?
Yeah, I have it buying up, but my entry is below where the market is now. So I'm not planning to sell it down to my entry, but then I was gonna buy it up.
Well, I agree it's buying up. In fact, this trade didn't even quite make it to where I thought it would go, but it is buying up. Here's a daily order block. I'm sure that the entry will be somewhere in these wicks.
Oh, I think. Why does your daily look different than mine? My entry's below that. Like, I guess I'm trading the macro. Like, I'm waiting for it to come all the way back and
Well,
then.
no, I mean, I don't doubt it. You probably listening to Kim. So yeah, where's your entry?
My entry is at the daily bullish OB, the top of it. So it's at like 1.005859.
Okay, I mean, right here. Look, man, I don't know that we'll come back down here anytime soon, but it's a possibility. You know, I mean, if you're at an OTE trader, you see I have an alert set right here, right? I'm not necessarily thinking that price is going to come down here though, but I do have an alert set. You know, to me, a safer bet would be to get in if price pulls back in these wicks and pushes up.
How is that the safer bet? Wouldn't the safer bet be to place a buy limit down there?
When I say a safer, yeah, that is the safer bet. But
Yeah.
I think it's the bet that you won't even catch a trade. But I'm saying I don't know that price. I don't have confidence that price is coming back down. If you're going to trade Euro USD, I mean, just pick your entry. Like if your entry is down here where I have my alert set, that's cool too. That's the optimal trading entry, and just be okay with it if it doesn't pick you up. That's all I'm saying. If you just wanted to guarantee that you're going to be in a trade, your entry is going to be up here somewhere. Maybe you can hedge or stop loss, you know, down at these lower levels. But if you just want to make sure you get into the trade, you can probably find an entry in these wicks, right? There's probably some imbalance or order blocks. Imbalance here. So very little imbalance here. But I think there are two areas here that might be of interest if you're trying to take this trade and go to the upside. You know, if you're waiting for it to go all the way down there to that daily order block, I don't know that you'll actually get an entry down there. That's all I'm saying. There's a way you can get into the trade and then maybe put a hedge in case it pushed down further. But, you know, I think you have to be a more advanced trader or be comfortable hedging in order to do that. If I was going to take this trade and I was going to get in here and I had a hedge, my hedge would be some huge lot size. Because if it activated my hedge, I would want to get paid for my time coming down here.
I thought you don't do huge lot sizes.
What's that?
I thought you don't do huge lot sizes.
No, I don't advocate that in these settings. But I would definitely I have to use the market. I have to take advantage of the market whenever I have it in a corner. So the only way you know you have the market in a corner is the market can do one of two things. It can either come down here and buy up, or it can come down here and sell. If it comes down here and sells, we already know where it's selling to. You know it's selling to this order block. So just like you cranked up your lot sizes in that small sale, you already know there's no other place that the price has to go except for this order block. So why would
it was a buy, but yeah.
Well, still, this is yours was a buy. This would be a sell.
But yeah,
So,
I knew where it was going. Yeah, definitely.
so you know, in these 70 or 80 pips, you know exactly. You know, you can sell this market exactly to the top of this order block with confidence. So,
yep.
Of course, I would crank it up. Now, I don't go and advocate that to new traders. No, I don't. But
yeah,
you know, if we're being honest, then that's exactly what I would do. I would crank that lot size up. I might even sell with a 35.0. You know, my point is, I might be losing, or this first entry would be red, but this sell entry would be so huge that I'll be making all kinds of money. And then once it came down here and started going up, this trade would eventually turn blue and I'd win twice. So if you understand where the market is going, you can always take advantage. You know, that's up to you as an individual trader to manage your trade. But all I'm saying is, if you're interested in a trade like Euro USD, there are several different ways to approach it. If you want to guarantee that you're getting in a trade, your entry will be up here. If you just want to wait and be totally safe, you can wait and see if price came down here, but it may not ever come down. There's nothing wrong with either way. But as a trader, I want to be in the trade. So I would probably choose to enter here with just a huge hedge if it went the opposite direction. Just a different way of looking at the market. Just like, you know, when I talked with Will Ross, you know, maybe about a week ago, and you know, he brought an idea to me about getting another prop account just in case, you know, because of his high risk trades. He said, you know, he keeps a prop account ready just in case he blows that one. I had never thought of that, you know. It's not that there's anything wrong with that. It's just that if I had never talked to him, I would never even have thought to trade like that. And that's the same way with these hedge positions. There's more than one way to skin a cat. You know, most people, when they think about hedge, and if you're asking me about a hedge, I'm going to teach you the basic way to hedge. I'm not going to tell you to get you a huge lot size going the opposite direction. I'm going to tell you to get the same lot, you know, the same size position on both directions. And if it activates your hedge, just be patient. It's just going to come down here, tap in, then you can start killing off your hedge and you'll be in profit, right? That's the basic way to hedge. That's what I'm going to tell you. I'm not going to tell you the advanced way to do it, because if you jack it up, you know, you'll be all pissed off at me because I gave you a way to do it. But that comes with time. So it's more than one way to skin this Euro cat. You know, if you want to be in it for the buy, you know, that's all I was basically trying to say, Kenyon. Not that your entry is bad. It's just that you know, you're an aggressive person, and maybe you don't need to hear me say that kind of stuff, but
It's okay. I've adjusted.
so, you know, there's, if you wanted to guarantee that you're going to be in the move, you might want to look for a higher entry and just hedge.
Appreciate it.
With being the Kim in the trade too. I really, you know I dog you a lot, Kim, but I really appreciate you because you need different viewpoints, and that's the purpose of coming up with a trading community, is because you have to have somebody has to be the calm in the room, and then you have somebody else who might be the aggressive person in the room. You need both viewpoints, because without both viewpoints, you have a one-sided view of the market. And if you're wrong, you're going to be totally wrong, and you may not even understand why you're wrong. You know, what Kim brings to the table is a more robust viewpoint and a more patience, you know, like she trades from zone to zone, you know, and that sort of thing. And it's nothing wrong with that, you know.
Can you dig into my yang?
Ironclad discipline. I mean, Oliver Velez will love her.
Well, I just think that she sticks to her rules, and you have to love people who stick to their rules. Even
I agree. I'm not knocking her. I'm just saying. I mean, I admire that ironclad discipline.
From there. Teach me, please.
So do we have any questions on what we covered today? Does everybody feel educated or empowered going into next week? If you
I just
have,
want to make sure I got it right. GN, we're looking for opportunities to buy GN, right?
yes,
Okay.
yes. Hey, can I say something about these weekly trades? If you want to be ultra conservative, right? And there's absolutely nothing wrong with being ultra conservative. If you're trading an accelerated account, a funded account now, you can look at these weekly moves And you can get in the weekly trades and just let it go, right? Your lot size is going to be very small. Your wins probably won't be huge, but it's a safe bet, you know, for you to actually win, right? And once you stack a few of those wins together, you know, maybe it takes you 4 weeks to advance your account. Maybe it takes you 1 week, but the point is, when you see the weekly order block and you take that trade, a lot of times that direction will be good for the next couple of weeks. So if you win money the first week, you can go back to that trade and you can keep on trading at that direction, you know, for the next few weeks. So if you look at these, let's look at AUD Chef. Okay, so if you look at AUD Chef, AUD Chef had a weekly order block. How many weeks ago was that? July 4th. The next week, price went down into the order block. You were still in the trade. The second week, price peaked at the moving average. It closed down here. You're still in the trade. Maybe you're up a little bit. Last week, price went right back to the same spot before it retraced. You're still in the trade. If you took this trade and you entered where we have the entry, you're up a little bit. Now the trade hasn't panned out, you know, as far as it hasn't went to where we have it going, but every week I can hop in this trade and expect this trade to push up. Expect this trade to push up until it gets to the zone. And it's based on the same concepts that we preach. We got a breakup structure. Price comes back to the order block that causes the break. And yeah, it broke structure, you know, what, 6 months ago in March. But the point is, price came back to the order block and now it's pushing up. So if you look for entries in these trades, right? On the daily, you got a breakup structure here. Here's a daily order block that we expect price to come back to. Guess what it did? It came back, it tapped right into that daily order block. And now it's pushing up. Same concept. All we did was switch time frames from the weekly to the daily, right? If you throw your fib on here, from here to the top, it came right to your optimal trading entry. It didn't quite get to the 78.6, but very close for your OTE. You could have hopped in for the buy, and now you're going to go up. Does that make sense? But over the next few weeks, we can continue to trade this pair to the upside. All you have to do is look for entries for the upside. Any questions? Now, let me throw a caveat to this AUD Chef. If we have a bad jobs report on Friday, this stuff gonna go the opposite direction. Okay. Do y'all know why it would go the opposite direction?
Because the same reason JPY is?
Well, yeah, but what is that reason?
Because Chef is a safe currency.
Thank you. Chef is a safe currency. There are 3 safe currencies. What are the 3 safe currencies?
US, Chef, and JPY.
Well, thank you, Kenya. You know, hopefully somebody else would have answered. But I just need everybody to understand that there are safe currencies. Why do we need safe currencies? What does the term safe currency mean? Anybody? Anybody who has an answer?
Okay.
Come on, y'all.
I'm gonna take a guess, not too volatile.
Yeah, I mean, that's
safe currencies, I guess, would have a lower interest rate and the persons in the country, the economy wouldn't suffer if you put your money in that low interest rate. I
Well,
don't know how to verbalize what's going on in my head, but it's
I
just
think
it's safer because you wouldn't be paying out so much interest then if you put your
you're
money
not,
in that.
you don't have the exposure. I think both of those answers are correct, but the US has a higher interest rate, but it's still considered a safe currency. You're not going to be exposed to massive loss. That's why the people or the investors, the hedge fund investors or the big banks sink their money into those currencies. Japan doesn't have a lot of exposure. The chef doesn't have a lot of exposure. And the US, they're not worried about bad exposure either. So that's why those are considered the safe currencies. Okay.
Is the US only a safe currency because it's tied to everything is quoted in US? Because technically,
Well,
it would be
honestly believe-
confusing.
Yeah, I believe that's the right answer. I don't think anybody would ever say that, but yeah, I think that's the correct answer.
Okay.
That is the correct answer because it's the world's reserve currency. That's
Yeah.
why it's quote unquote safe.
All right, good folks. If you guys don't have any more questions, we'll adjourn until tomorrow. If you guys have any losses that y'all want to talk about, I guess I'll be available at 10, but if not, then the actual call will start at 11.
I have a dumb question. Did you say there's no such thing as a JPY XXX pair?
Yeah.
I did not know that.
Well, I mean, it's not a big deal. It's just, if you think about it, like all the pairs are XXX JPY. Like there's
Yeah,
no,
like why is there no JPY XXX? Like I thought every single one that has a XXX, JPY, CAD, AUD, there's
that's a
always
great
one
question.
there in the front.
I don't know. I never thought to ask why, but I don't know. Maybe if we Google it, maybe there's an answer. I don't know.
Yeah.
When Ty was talking about, that the JPY pairs was dropping, I realized that I was like, JPY where? And then I realized that everything was XXX JPY. I was like, oh, it's no JPYs.
I had no idea until today. Well, thanks, y'all.
That causes a lot of confusion though. When you say stuff like the JPYs are dropping,
Mhm.
or the JPYs are going up, if people don't understand that JPY is always on the back, it can cause confusion, So, and that's
now everybody is unconfused,
Right.
but there's a lot of little things like that go on in these classes where I assume that people know certain things, like with that forex
That's
backing.
because we were taught back in Ruby's group, the base pair versus the whatever other pair it is. The quote, yeah.
Right.
So
Well, I also believe, listen, we're going to give you, there's a certain level that we're going to talk on these meetings. And if it's above the level you're at, you have to reach out for one-on-ones. And the second thing is you got to pick up your computer when it's just you by yourself, because it's impossible to cover every detail and every nuance. Just like I talked about, there's advanced ways to hedge or the way that Leandra spotted her trade, it wasn't based on a daily order block or a higher time frame. There's 1,000 different ways to trade what you see, but you have to do a little studying, and you have to come up with concepts or ways to enter trades to take advantage of concepts that are already out there. And that's just, you know, that's kind of where we can refer back to what Oliver Velez was saying, your experience. You're not going to be a great trader until you get some experience under your belt. Like, you're not going to be able to go in the market and pull out $7,000 in a 20 pip move until you gain the experience. Like, once you win 20 pips over and over the same way, it's only a matter of time before you figure out, man, instead of me making $25 on this 20 pips, I can make 2,000. And the same 20 pips is available to me on the same setup every time, you know? So there is nothing wrong with you making the $25. Don't get me wrong, but the experience is what's going to allow you to make the $2,000, because you understand your trading range and you understand why the market is moving to the place it's moving. So it's not an accident. You're not stressed about it. I mean, you understand the move. So I'd just like to encourage people, if you don't understand something, or you know, just like you ask about the JPY, just ask. And you know, once you get your answer, you know, write it down and go do research on it. Go study one thing every week. You'll become a better trader, you know. You know, it's funny that now, as I sit, you know, 2 years into my trading journey, a lot of the people that I've watched and have been the most influential, I don't even trade like them, but I've learned so much from them and their strategies that I can still use what they've taught me in my analysis. You know, I listen to that Oliver Velez video a lot less nowadays. I used to listen to that video like every other day. And for those of you who have never heard that video, I mean, that video is a lot longer than what I played. I just played you a little snippet of what he was talking about, but he talks about the pros of being a professional trader. Then he talks about the cons of being a professional trader. You know, I think they're equally important, but you know, I have to bring up the cons because we all know the pros because we wouldn't be here, right? But the cons are equally important because it prepares, or it gives us a reason to be prepared, right? It helps us understand that it doesn't matter how much we learn about the charts and about the news. If we can't be self-disciplined, then we're still going to mess up the trade. We're still going to be over leveraging. We're still going to be taking trades when we shouldn't. We're going to be speeding when the speed limit says 20. We're still going to be driving 25. And you can't drive 25 in the Forex market because you're going to get in an accident. So just be encouraged. Do your homework. Do some homework every week. Even if you don't do it every day, do it every week. Take notes. I know these Zoom calls are recorded, but most of us never go back and listen to it. You know, most of us never do. So you leave the call, you feel good, and then tomorrow you forgot half of what was said, and you never revisit some of the good points that we bring up. We cover a lot of information and we talk about a lot of the trade setups, and then once the week starts, you forget about it. You never even right click and set an alert. And then when we get to the end of the week and you say, hey man, did you take advantage of this trade, that trade? You like, man, I lost 2 trades and I was out of it. But dang, how did you lose the trade when we talked about, you know, what was going to happen and where you can enter the trade? So if you're not writing it down, you're doing yourself a major disservice.
I have a question about this pair you have up.
Yes, ma'am.
Did you say, I know you said it's buying up, and I do agree that it's buying up, but you don't think it's going to go down any? I know you said it's almost at the 78, but see how the last candle, I guess, broke structure past those wicks? You don't think it's going down anymore?
Well, I do think it'll go down. I think it'll be a up and down. The same way it's been bouncing, I think you're going to see it bounce. I think it's going to go back up. It'll bounce. It'll come back down. It'll probably double bottom, but this is not going to be a smooth ride for for a couple of different reasons. Like, in my opinion, you got this big drawdown because of the US news, right? Other than that, I think we would have pushed up a lot faster. And that's why I say that that the Friday report will go a long way to determine whether this analysis is going to still be correct. Because if we get a bad report Friday, the CHF will be a lot stronger. The AUD is going to sell against the CHF. So you'll see the AUD push down. So it's still a good trade setup until that news comes out Friday. I don't know how many pips this is. Let me see. If you take this, probably about 50 pips. It's still good for 50 pips on the buyout. But you know, the news is going to affect all the pairs. NFP week is always a crappy week. I always say this, NFP week is the hardest week to get money out of the market because a lot of the pairs won't move a lot until after those figures come out. And some people don't trade on Friday, so that just ends up being a bad week for them.
Gotcha. Thanks.
Do I have any other questions? All righty, folks, let's call it a day.
No, that was really good, Todd. I found a video. I found a